Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. It should be fun. Good morning, everybody. Tuesday. My headphones don't sound right. It's okay. Scott, good morning. How are you? All right. Well, well, I guess the big piece of news is, if we bring it over here, is that Gamestop overnight just looks awful. So we closed around 200, and in the aftermarket, it has just been getting pummeled all the way down to 128. So maybe we get that 100 after all at some point, right? That's just pretty ugly. What is that? That's a 43% drop in aftermarket trading. Now, my understanding is that Robinhood still has the hold on. And at this point, one must wonder, why still have a hold? Now, the piece of news yesterday that I think we kind of missed was that the S3 numbers came out, and the S3 numbers were showing like 53% short. Now, the way that they show those numbers is a little bit different from the way that everybody else has been calculating it, because everybody else has been calculating it based off of the float shares. And when you do it off of the float shares, it's still like, 122% or something like that. So from what I can see, and at this point, I think that we have to admit that the data that we have is probably unreliable and not up to date. And I'm not sure that I really trust what the percentage of shares short really is until next Tuesday when those official numbers get released. But from my perspective, there's still a lot of people short. So if there's still a lot of people short, then why does Robinhood still have the number of shares restricted? Doesn't really make sense to me. But that is where we are at on that. Okay, so where is my... Oh, here we are. Now, as the retail craze, I guess you could say, subsided, and that's really what it looks like right now, is that like all of the buying died down, and the retail traders are upset, and the narrative is that it's over. That's what they're saying. And pretty good up move in the equity indexes as a result. So I think that there was a lot of volatility because of this. And yesterday they went up and up and up, kind of came up to their targets here around 77, and then in the overnight extending even further. 10-year coming down as a result now too. So it looks like that the markets have decided that it's game on once again. And that overnight move looks awfully aggressive, right? Oil extending as well. Oh my. Now gold not looking so hot. I mean, they're back to like support, I guess. Oh my gosh, did it not save my... Oops. Didn't save my my changes I made yesterday. Duplicate a new tab. SI future. Okay, so here's the silver futures closing that overnight gap. Now, realize that on Thursday and Friday, they were up pretty big as well. So is it going to come all the way back down? Who knows? I have to say, I was quite surprised. No, I don't want to say surprised, but I really did not expect Reddit to like turn on the silver trade so quickly. It was like, no, don't buy silver. That helps the hedge funds and yada, yada, yada. Like, just stay in GME. I don't know, man. It's hard to read this subreddit right now because there's so much misinformation and nonsense going on over there. Okay, copper actually down a little bit. That's interesting. And the dollar's still doing okay and actually sustaining prices above 91 now. Well, that's interesting. Pretty good move up yesterday as well. And we got all of our robots on. Doesn't look like any of them have really taken trades yet, though. Oh, no, wait, these two did. That's interesting. Both Indy and Brandon took one? I don't think that Brandon should have took one. That's okay. Yeah, so the thing that drives me crazy the most about Reddit right now is the whole freaking short ladder nonsense. Okay, so what is a short ladder? So say we're over here in the treasuries, and we want to move it down, so I'll bid here, and you sell into me, and then I'll pull my bids and you put a bid and I'll sell into you. So I lost $1 off of that, right? And then you pull the bid and I'll hold an offer and you buy into me. And, if I sold, then I made $1, right? Okay, so then it comes down and I let you buy into me. I make $1. And we just keep doing that back and forth. So I'm making $1, I'm losing $1, doing that back and forth, okay, right? Like, that requires coordination, and it's illegal because you're not allowed to coordinate like that, right? But here's the thing. So what you will see on the chart is price will move down, not a whole lot of volume. Kind of like what we're getting here in Gamestop, right? But it requires coordination, and that's why it's illegal, is coordination, right? If you get low volume down moves, that doesn't necessarily mean that there's collusion going on, right? It could just mean that the bids don't want to hold inventory and are limiting the number of contracts that they take and are pulling the whole way. And then it just keeps going down, right? So this whole meme about like that it's all short ladders is manipulation. That's not true. It's extremely unlikely that that's what it is. Like, hedge fund doesn't collude. Well, do you have any proof of that? Like, do you understand what they're doing is they're saying, okay, it's a low volume down move. That must mean that there's manipulation and collusion. That doesn't prove that. Go ahead and take that to court. You get laughed out of court because you have no evidence of the collusion. Right? And this is a meme. I know it's unpopular for me to say, but it's the freaking truth. And this is what we specialize in, is the market making. And I'm telling you that right now, if I was a market maker, I wouldn't want to be taking contracts on long. Because the news was yesterday that because of these S3 numbers, that the number of shorts decreased. Well, from my reading of it, I think that people are misinterpreting that number. Okay. But that's why it's moving down. If you're a market maker, why would you hold any price? Why would you do that? Right? And you can't force the market maker to buy something. You can't say, oh, you have to put a bid there and you have to take that order. Like, you have to do that. They don't have to do anything. So I'm a little frustrated by that on Reddit right now. What else is going on Reddit that I think is incorrect? I don't think you can say that the silver run is like collusion by the hedge funds. There is a group of traders out there that have been into silver for a long time, went out and bought a lot of silver over the weekend. And when you look at the paper, apparently the people looking to buy actual silver, like, there was a ton of that. And it actually, the futures market didn't move up as high as it should have if it was going to follow what the physical market was doing. So, like, those guys are just pushing their thing like they always do. So I don't think that that's some hedge fund conspiracy either. All right, it's full of done people. Well, I didn't get duped. I mean, you got to remember, like, think of it from my perspective, okay? I bought at 80, I sold at 320. So I made like $240, right? And then I bought it again at 250, right? I probably could have gotten away with getting it off again at 350, but at that point I said, no, I'm going for the long trade now. So I'm risking $10, right? Like this thing literally goes to zero. I lose $10 on the overall instrument, right? If the trade still works out, this thing is going to like 1,000, 2,000. Okay, that's like 100 to 1 risk reward. Why wouldn't I hold that? Why would I? I think that you'd have to be a complete idiot to not take it. Yeah, I know who you are, and I'm sick of you trying to come back in here. You made 3,900 on GME and then got out? Such perspective, he got him viewers, so it's good even though it was a terrible investment. Nobody should have ever bought GME. No, I don't agree with you. I straight up don't agree with you on that at all. So first of all, yes, I did get viewers off of it, and I guess that overall for me it's a good investment. Like probably what we make from growing the community and the information that new users provide and how it helps us develop our strategies and everything else, it's worth a lot more than the 250 or whatever. I guess it's $10 really now, but you know, whatever I had at risk, the $80 that I originally had at risk in GME, yes. But I don't think that you can say that it was a terrible investment. Like the thing is that if Robinhood had not shut down the trading of it, I firmly believe that this would have already touched $1,000 already. Like Melvin Capital, it looks like Melvin Capital, this day right here, go back to this day right here. Okay, it was up 450 in the pre-market, and then Robinhood shut down trading. It went all the way down to 150, and then it came back up. And who was doing that? And I believe that was probably Melvin Capital covering their short, right? So can you imagine if they hadn't have shut down their shares and Melvin Capital had covered all the way up in here? That they might have gone into $1,000 right up in there. So I think that the trade and like the whole thing, if you were buying it, you know, way back here, like when I got involved in it, right? It was a great trade. It was an absolutely great trade. And from there, it just matters how you managed it. Okay, Seth, trying to figure out why futures are not regular stock trading. Is there an extra edge on futures, or does futures give you more of a chance to beat the market? So I'm not so sure that I would say that it gives you more of a chance to beat the market, but it is much better suited to specific styles of trading. In particular, if you are trying to day trade and you're trying to scalp a small amount out of the market and you want to, you know, you don't necessarily have a lot of inside information, I think that you want to try and factor news in as much as you can. And if you're a news trader, the futures, it would probably also be a really great place to do it. But basically, when you trade futures, you get more information and it's more liquid, essentially. So over here in the futures, like the ES futures right here. Well, let's do MES. Let's say you're a small guy, okay? Here in MES, at any given price, there are 60 contracts out. This is pre-market, okay? If you went over into stocks and you looked at SPY or any stock, really, I mean, well, we can do it here in GME. Let's see here. So here's the bid and ask in GME. It's 50 cents. Okay. So there are 50 levels between the bid and the ask right now at this moment, right? In the futures, one tick. Minimum price fluctuation, one tick. There's orders at every level, and there's 50 of them. And so the general gist of it is that even in crazy action, if I click somewhere, I am pretty much going to get the price that I clicked. So the liquidity is really good, and then I can go short or long anywhere that I want. I don't have to worry about finding shares or anything like that. And then, I can I get lots of leverage, so I can buy it here, take it 2 points and make $10 and be done. Or I can take a bunch of contracts and do $10 and, make $100 or whatever it is that you're looking to get, right? And then I can put my stop there, and I know that I'm going to get hit where my stop is for the most part, unless it's like a really crazy situation, and I'm going to get my stop is, and there's not going to be a lot of slippage on the stoppage. And I know that I can size up. So if I'm trading this and all of a sudden I want to do 1,000 contracts, well, I would move over here to the E-mini and I could start trading hundreds. And look, like the people are already trading 100 lots. It hardly has any impact on the market at all, right? So that's kind of where you want to do futures. There's also like tax benefits and so forth. I have a whole video on this. It's called Robinhood Traders Stop Wasting Time with Robinhood and Trade Futures. And I explain what the advantages to futures are. I'm surprised that we already have 74 viewers. Wow, guys, thank you so much. You led no, I didn't. I never told anybody to buy it. Come on. Seth never told anyone. Yeah. No, Aaron is just a troll. Aaron and I have been friends for a very, very long time because I think he was here on like the first stream, and he's always coming in and trying to bust my chops and be a troll. It's fine. It could go to 1,000. That's the same thing. No, it's not. It's not. If I say I got in something and I think that maybe it will go here, that's not financial advice. That's just me explaining what I'm doing. I don't even think he really believes most of the things that he's saying. He's just going into he's using whatever it is that would be the most ridiculous argument that he can come up with. Yeah. You think Wall Street bets are crazy for calling GameStop the next Volkswagen? No, I don't. Did you know? So I was looking this up yesterday, and I saw the numbers, and I was like, no, that's not true. So when I looked at it, right? So when the Volkswagen squeeze happened, Volkswagen temporarily became the most valuable company in the world. Okay. If GME... which it's absolutely ridiculous to think that they would get to the same market cap because GameStop is a much, much smaller company than Volkswagen is. But if GameStop were to become the most valuable company in the world, if they were to reach that same market cap that Volkswagen did, it would be worth $100,000 a share. Can you believe that? So, yeah, and when you look at it and you factor in a couple of other things. So remember again that price impact is not linear. So everybody thinks that, okay, for us to get to 1,000, you would need X people to buy, or you would need X orders to buy all the way through up here, and that's what would get it to 1,000. But it doesn't work like that. If the squeeze was on, the market makers would see it. You have somebody that would be, because when you get margin called, it's basically they just throw the orders out there, right? And they're getting rid of it as fast as possible. Okay. The market makers are going to see that, and what are they going to do? They're going to pull their offers. And that's what they did over here. That's what they were doing over here, is pulling their offers. Okay. So you can get price moving very, very quickly. And when you've got a situation where they're going to pay any price that they have to get out of it, it really just comes down to like how quickly can the market makers like cancel their orders. You know what I mean? So there's not really any limit to how high it could go. And given that we were at $500 at one point, I don't think that 1,000 would have been, outside of the realm of possibility. I don't know how likely there's no way for us to calculate how likely that actually would have been, but let's just say that it's not outside the realm of possibility, right? You saw someone is down 300,000? Oh, I saw a lot more than that, man. If I kept talking about how Bitcoin is going to 1 million and no, because the way that it becomes financial advice is if you come in and you say, okay, Seth, here's my situation, here's how much money I have, and here's my risk tolerance and my financial goals and everything about my financial future and all that. And then I said, Air Cages, you need to go and buy GME. That is the correct strategy for you, is you should buy GME. Or then you even went further and you said, here, I will help you put the order in. Okay, now you're giving financial advice, and you shouldn't do that unless you're a certified CFA, which I am not. Is Wall Street Bets an echo chamber now, saying all these reports are fake/fraud? It's starting to sound culty. Well, it is culty, but it's not. That's just people. Do you believe Robinhood should be punished for what they did? Well, I think that they've already been punished for what they did by everybody leaving them. I mean, like the Robinhood IPO is probably not going to happen. The owners, like the people that own Robinhood and make the big money off of Robinhood are missing out on millions of dollars now, because nobody in their right mind would buy a Robinhood IPO right now, right? So that alone, I think, is punishment enough. But again, like that just brings me back to the thing, which is, you still can't buy shares over there, right? You can buy like one contract or one share, because they're not contracts, they're shares. They're stocks, not futures. You can buy one share. If it's over, if the short interest is gone, if this is actually collapsing and this, that, and the other, why don't they open it back up? Makes zero sense to me, right? They were saying there are so many people on both sides of this bet that we can't cover the collateral. You have to put up more collateral. And so Robinhood went out and found billions of dollars in funding. Billions of dollars. They've like now secured something like $4 or $5 billion in funding. So they've done all of that. Nobody is able to buy this thing. The price has come down significantly. So like surely there's no problem on the short side. Why aren't they opening it back up? I can think of two reasons. Like, I can really only think of two possibilities here. One possibility is that they're just being shitheads and they want the thing to fall apart, and they're just not going to open shares because they want the whole thing to die down. That doesn't necessarily mean they're in collusion with the hedge funds or anything, but just that they're uncomfortable with what's going on, and so they're just going to put a complete stop to it. That's possibility number one. Possibility number two is that the shorts are still in. All the way back to like 80. You know what I mean? I don't think the impact on Robinhood will be that big. In a few weeks, people will forget, and Wall Street Bets will just continue to buy cheap options on Tesla. I don't think so. I think that there has been a more widespread culture. So like, here's the thing. There are a lot of people out there that I know that have literally never read Wall Street Bets, literally never read anything online about trading, never had an account that they could buy or sell stocks in, and they went out and got one this week. And like, these are people that like I would rave with, and you know, or maybe even like pushing communism and like total burners, and they're like, you know, dispensing in, you know, stuff on stocks. And everybody always says, well, that's the sign of a market top, right? But there are some things about this market that kind of makes that like, I don't think that that GameStop falling apart here dissuades them. I don't think that they go in and they say, oh, okay, I guess the whole trading thing is, I'm just going to forget about it. Some will, but I think that there has been a a widespread change in the way that people approach markets that is going to have long-lasting impacts. For instance, I don't think that any large hedge fund is just going to go all in on a short on a stock anymore, because everybody's going to be looking to squeeze them out, right? That alone is going to be a significant change in the way that a large number of hedge funds operate, these short-long hedge funds. That whole strategy, that whole portfolio mix and everything else like that, yeah, it's good. It's going to go away. That changes things. You're so hot, you should do that. Thanks. This is because we were talking about that yesterday. Huh? You people. It's pretty ugly. The move, though. It's pretty ugly. I don't know. So the thing that I find interesting about this, too, is the sentiment change. You know what I mean? So, like, from 500 to almost 100. Remember, I had an order out here at 100 and I didn't get filled and I was pissed? You guys remember that? Like, that happened in one day. So then we had another day of it just going sideways. And then we had another day of it, well, it was down, but then kind of, the rest of it was just kind of a, let's call it even, because it was like there was the move and then it came back to there. Okay. And now this pre-market is just like completely down for no reason. Whatever, that's okay. It's still down into this same area. So why wasn't everybody freaking out on Thursday? You know what I mean? But now all of a sudden on Tuesday, everybody's freaking out. And I'm sitting here like, well, of course it's going down. You can't buy it. When you can't buy something, there's less buyers. And it's just going to go down. Simping. Does Wall Street Bet's diamond hands not help their cause? That's a good question. I think that if people were able to buy right now, that they would be like winning hand over fist. I do. Like, it seems like that it was a lot of hype and everything, but I don't think that all of the money that was out there available to get in actually did. And is holding now at this point help or hurt? Well, if you sell, then that certainly hurts the cause, right? But the question still comes down to how many shorts are there out there, right? Like, that's kind of, and again, I don't feel that at this point that the information that we have on that is very trustworthy. That doesn't mean shit. I was the only one bearish, yes, but you might have. Here's the thing: is like it depends on how you manage it, right? Like if you're bearish on GME and you come out, it's $100. Because remember, I bought it the second day that we were doing all this stuff, or after the first day that we were doing all this stuff, and I bought it at 80, and then it goes up to 500, and you were bearish. It goes all the way up to 500, and then it comes back down to 100. Okay, you get out at 80. And Air Cages is here saying, don't buy it. It's a bad move. Was he really right? Like, was he really right? Like, if I come down and I give you a price and a time that you buy it and where you're going to take your stop and where you're going to take your profit and all of those sorts of things, and then you can sit down and you can conclusively say if you were right or you were wrong on something. But if you just sit down and you say, well, I think that price is going to go lower, and you sit and you wait for 3 months and like maybe it eventually happens. You know what I mean? Like you can mess with people and make it seem like you're right all the time just by messing with the time frame. Right? I can sit down and say, if it ever went higher than my entry price at any point in time, then I was right. And then you just take the super teeny tiny profit. And when you're wrong, you'll be wrong big, but everybody will forget about it. If the shoe shine boys are giving stock tips, it's time to get out of the market. So for that, do you really think that the S&P 500 is going to collapse here? You say that chasing it is wrong, but I made money on it, so what are you gonna say? And you don't know what's gonna happen today. You don't know what's gonna happen tomorrow. This is the thing. Like, I wish that we had done this on the other way before, because then I probably would have given you all of the bearish cases, right? Because I'm largely being contrarian on you guys to be contrarian, right? Because you're sitting down and you're saying that you knew the whole time what was going on. No, you didn't. Did you know that it would hit $500 first? No, the hell you didn't. Come on. Don't give me that. Yeah. So if you want to say you were right on something, did you take a trade? Okay, if you went and you had a short on GME and you have made more than $240 per share on that trade, then present it and you can say, yes, Seth, I was more right about this than you were. Or let's just say that it comes back to $10 and I scratch it out, and then we're even, aren't we? Or I could just cover it right now and I could say that I was right. No position is also a position. Yes, but no position doesn't give you the right to come in and say that you were more right or smarter than somebody else, unless you've got something else come in and say that, you know, you took another trade and it worked out and it was good. I'm still of the opinion that as long as GME is still tradable, one could always average themselves out of a bad situation. With the hell, the lower it goes, the cheaper it will be to do so. You know, that's probably true, Uzi. You could probably buy a bunch of contracts and then let it come up a little bit and get out. But like here again, it's like, this is the thing that I find. How do I put this? Did you know that Robinhood was going to stop trading in shares? No. Okay. If Robinhood had not kept trading in shares, then like the full-on best case short squeeze scenario would have happened. And then you definitely would have been dead wrong. Right? So I don't think, like, here's the thing. I can come into Bitcoin. I can tell people, hey guys, Bitcoin is overvalued. I have a put on it right now, okay? And people buy it anyways. And I've been right about this like 3 times. It takes a while for it to happen, but it goes down, and I've been right on my Bitcoin calls many times. And I watch these people, and they have every excuse to just not believe it. It's like, here I have this historical record, all this information, like this is the what you should be trading off of. Here's a historical record, here's a strategy, and here's how you play it, and it has a historical positive expectancy. Nobody follows that. Nobody believes it. Nobody believes it. But then somebody else comes along and they're like, well, I feel like that maybe this thing is not going to continue and it's going to fall back down on you guys. And it's like, oh, these guys were all right and geniuses. No. I refuse to admit defeat on Jimmy. No one could have predicted the moves and manipulation we have all witnessed since last week. I agree with your views. Who could have predicted the silver jump? No one, but it happened. Well, I bought on silver and I made some, well, I don't know what I want to do with that one, but I caught that jump like big time. I guess I could have taken it off yesterday, huh? But I was the call in particular. I was expecting to hold that till expiration. I don't know. Big part of my decision to get out was a massive amount of bots talking about it on Reddit and Twitter. I don't know, man. Like, so this whole thing that like this is all manipulation by hedge funds is like, but there's no proof of that. Like, even if you have a bot, you have no idea why that bot was there. You know what I mean? That's why you never go balls deep at one priceless stocks. You get thousands of dollars to play GME, spend time keeping average play. People who dumped it, yeah. Or people who dumped into $400 a share are mad screwed, yeah. And yeah, I have to agree. It really is manipulation. Like, I really don't think that the skeptics on GME really have the room to come in and say, I told you so, and that they were right, because it moved up and it was going to keep moving up if it wasn't for shenanigans. And if, I don't think that this should have happened. Can I say it that way? I think that what happened was immoral. I think that somebody made a mistake and that it shouldn't have happened that way, that the retail traders should have made their money. People need to find a reason or validation. Well, yeah. So now here's the other thing is like, what is your strategy and everything? And like, what is a reason to get in and out and whatever, right? So here for me, let's just talk about for me and not like everybody, because the Reddit line is that you should just buy it and hold it forever. Well, let me tell you something. They're not going to hold it forever. Okay, they're just not. But they don't think that it's over. I go and I look at these S3 numbers, and that was the thing that everybody was basing that yesterday, that like it's over. It's the S3 number. Okay. The way that they represented it was like percentage of like the overall issued shares, and not all of those are public, right? And they're including all of the shares that get created when you go short too. So if you do the number as a percentage of the float, their estimate still shows that it's over 100%. So if it's still more than 100% of the float, then isn't the trade still on? So, and this is where I have another issue. Is to be honest, some of you guys are a little too finicky. Like, it's really easy in chat to come in and just be excited about whatever the current thing is, and then like when it changes, just kind of pretend that you've changed too. But I've rare to see you guys actually be like, hold the line when something's going against you, right? If GME turns back around and goes back up to 500, 1,000, because they're right that there still are shorts in there and they have to cover and whatnot, like, they're going to look like geniuses, right? Yeah, hindsight is damn funny, right? And it's just like, I don't mean to like harp on everybody. Is the point that I'm trying to make here is that I see a lot of people acting like they know what is going to happen, or that they knew what was going to happen, and that's not true. We don't know. So like, that's why I was like, go back to, because you're like, oh, you got it wrong. I was like, okay, I risked $10 to maybe make $1,000. That's a good risk reward ratio. I would take that. The chances of you getting that one are good, especially if the shorts are still in. I think I should hold it to zero personally. If I hadn't taken that first trade, then probably should be getting out right now, right? I'm just here to learn. The ear to the ground while I'm reading the book. Yeah, okay. I probably have spent a little bit too much time on that. I think y'all get the point. Is this the definition of synthetic longs when fake longs are created from short? Well, so my understanding is that when you get like shares short, that you kind of have to consider that there's like extra shares out there that didn't exist. But there's when people talk about as synthetic, they're usually talking about a trade that instead of buying the shares, you've created with derivatives. Like if you buy a call and sell a put, then you get a synthetic long. Robinhood scared people. Well, do you think that they're going to pull the rate? Oh, you know what? I should turn on the text-to-speech thing, by the way. I never did that. Yeah. My understanding, by the way, is that there's still people to cover for the derivatives, and they get they have until Wednesday, right? I don't know a whole lot about how that works. It's certainly, I think, like yesterday, we were supposed to start seeing a gamma squeeze, and that didn't happen. So that's definitely one thing that the Reddit guys were saying was going to happen, and it's not. What do you think the hedge funds are doing right now? Probably nothing. I don't know. What's your favorite trading style? Whatever makes you money. So let's try and change the subject for a little bit, because I feel like that we're just going around in circles. There's nothing more. Like when you look at it here, I mean, I'm a little surprised to see it going down in the pre-market the way that it is, because I don't think that the guys on Reddit are bailing. But if you can't buy on Robinhood, you can't buy on Robinhood. I don't see any real change in any of the information since last Thursday. And I think that it's just like, we've already said everything that there is to say about it. You know what I mean? The only thing that I'll say is, like, just in closing, the big question in my mind is, why is Robinhood still not allowing shares? Because it's been like 3 business days. So what is the best strategy? Here's the thing. When you trade, you have an impact on the market. A lot of people want to think, well, retail has no impact on the market. Yes, you do. It might be an infinitesimally small, almost barely even measurable impact, but you have an impact. When you trade off of an edge, okay, that aggregate impact moves the market and arbitrages away that edge. And as you grow your account and you get bigger, you will take more shares until the shares that you are trading on it are create so much impact that the execution cost of your trade will actually lose you money. Okay? That's the way that it works. So, what is the whole point of all that? The market arbitrages away edges, okay? Any kind of statistical edge that you think you found in the behavior of this thing is going to get arbitraged away. People come in and they say, well, you just have to use the volatility, and if you just use the volatility, then you always make money. And no, that's not true, because the way that the volatility works is that it will stay within our volatility targets 90% of the time. Well, it's 60% of the time. And then the other 40% of the time, well, and then maybe 20% of the time it doesn't get there, I think. And then that other 10% of the time, it goes so much further that the amount that you lose on that 10% of the time totally outweighs what you made when it didn't. Okay? This is the way that the market works. It's because of the actual mechanism that's going on here. Any kind of statistical aberration that you find is going to eventually be arbitraged out. And the only things that you will find will be statistical aberrations that rotate. Ones that will exist within certain markets and then go away. And that's the reason that they still exist, is because they're inconsistent. right? So you can't go out there and find some strategy on the internet like, okay, here's how you scalp, and this guy tells you how to scalp, and then you go in and you do it and expect that to always work for you, because the more people that trade it, the more impact that they're going to have, until a certain point the number of contracts that are trading on there creates the execution impact that is greater than what you actually make on it, and so you lose money. So what is the best trading strategy? It's a trading strategy that you've developed. And that's why when we're coming in here, I'm not trying to teach you a strategy. I'm trying to teach you how to develop a strategy. Right? Well, how you read news and market moves and things like that is one part of that. Right? So here, if your strategy is taking advantage of short squeezes, I think that the Gamestop play was a good play, and it probably would have worked out under normal circumstances, but because of legal shenanigans, it didn't. And that's just going to happen a certain percentage of the time, I guess. What's stopping you from taking profits now? Well, because I don't think that there's the risk reward really gives me any reason to get out. Does that make sense? Like, you guys are thinking of it from the perspective of like, oh, I bought 1,000 shares, and if this goes all the way back down, I'm going to lose like $1,000. But you got to realize that I made double on it, and then I got in after it pulled back 50%. So basically, no matter what, I don't lose money. It would have to drop another $120 for me to lose money, and the maximum that I can lose is $10. Is that? Can you imagine that? Can you imagine being able to hold $10 risk and possibly make $1,000 on the greatest trade ever? And you did that because you were able to pick the right prices and everything? I'm pretty proud of that. I guess this is why I've been arguing with you. That is why I've been arguing with you. You know what, air cages? Fuck you. I did awesome on this trade. I'm really proud of myself, and I don't think I have anything to be ashamed of if I hold it all the way. I am proud of you. Thanks, miscellaneous. If Robinhood didn't stop the trade, 250 was a good buy. I right? And on the silver trade too. Now the silver one, if I lose like a ton of money on the silver one, then we should be disappointed. But what are we at right here on this? They're at 18.1. I mean, I'm okay. If the silver trade like flunks and goes down, like AG goes down to like 10 or 5 or something, and then I'll be like, what? It's fine, Seth. It's okay. I know that part of you is you're just messing around. Calling it a bad trade when it went over 1,000% over 3 days is, yeah, I agree. Make the stream trade in a risk of environment with real money and then talk about it. Yeah. Well, I want to stay small cookies. I don't this is an interesting thing to me. So like I thinking about Raging Kitty, because like honestly, Raging Kitty, he's doing the same thing that I'm doing, right? He runs streams and he had a YouTube channel and he talked about what he was doing. He is doing a completely different style of investing. Actually, maybe a style of investing that maybe would have made more sense to me. Although I don't think that I would ever put as much risk on it as he did. How long have you been trading? Forever? No, I've been trading futures for 4 years, and I've been watching markets since 2008. And anyways, he hit it big. So like, here's the thing: if he were to listen, I don't think that he would ever. Well, maybe he does. Maybe he has watched our stream before, but I would hope that he has much more important things to be doing right now. He does. I did find out he does have a family. He has kids, wife and kids. He's got a lot more important things to be doing right now, right? But if I were to give him advice, it would be this. What you did before isn't going to work anymore. You're too big now to do it. It was a great small fry strategy, but now that you're a big guy, you're going to have to trade it more like Warren Buffett does. And everybody's going to be following you, right? So I think about that from my own perspective. Like there is a limit to how many shares you can take on any given strategy. I have discovered that there are actually ways to calculate this. You have to know, though, how much you're going to make on it. So if I come in here and I say I have an edge that the market is going to go up 8 ticks, you can go in and you can look at the average amount of volume that's trading and the spread and the number of contracts that, like, there are formulas that you can use to tell you what is the maximum number of contracts to maximize your profits on that trade. Because if you start taking too many contracts, then it holds you back. Right? Am I ever going to get it to the point where it's that sophisticated? I don't know. I don't think, I don't want to take my trading to the point where I really have to get that sophisticated unless I was going to have like the support of like a bunch of people behind me doing it and doing these calculations and helping me manage risk. Like if I was a hedge fund, it would be a different thing, right? But like just me doing it on stream here, like, no, I'm always going to be doing small trades and small amounts of money. If I were to give him advice, it'd be to bail out, trader first, activist second. Yeah, I don't know. I mean, he took a lot of profits on it, so. Oh, wait, he's going short, huh? That is not what I expected, but then I come over and I look at the chart and that's the correct trade. I'm not sure why 96 though. You know what? My mouth and my lips are getting really dry today. I don't know. If the situation is right, I might put another contract on, to be honest with you. I personally, but so I will make one prediction. This is not like a prediction like let's bet our entire reputation on it, but on GME, I think that the move overnight was pretty dramatic and extended and overnight, and they're probably going to retrace a significant portion of that today. And when Robinhood opens up trading of shares, I bet you they're going to buy it back up. Anon, when did you realize you had started to cross over into the informed trading realm? What are indicators that you're becoming able to make informed decisions? Okay, so this is interesting that you present it that way, because that suggests that you've been reading some of the scholarly literature that I have, and that you understand what I've been saying about this, and that you've been watching longer than I thought. So I think that I didn't really understand what it was called and what the terms were, but I had realized that I could not make money purely from the market making aspect well over it like a year and a half ago, if not 2 years ago. I'm having a hard time now, like squaring away the time frame now. It's kind of weird because like before this coronavirus, I could tell you like here was all the market moves and here's what I was doing, and now it's like it's all fuzzy. It's like the coronavirus was too much information and it kind of pushed some of my market memory out. But when I started doing this in 2017, I guess, when I first started the stream, for that first like 3 or 4 months, I did so well. That was probably my best trading, was the beginning of it. And I was using almost purely market maker approach. And that worked really well until around April or May, and then it just fell apart. Now, I think that the reason I was doing so well is because the treasuries tend to move at the beginning of the year, and that year in particular, there was a lot of reason for the treasuries to move, right? So then I went back and I started doing things like, okay, maybe it was just that approach, and it was like the time frames and stuff like that, and I have like a seasonal edge. So I went through this whole thing of trying different ways and keeping really good stats on the level 2 and everything else. And when I really got down to it, what I found was that there was some strategies that I had found that worked really well for certain periods of time, but that over the long run, they were all basically break even, because you would get these periods where it was just like too big of a drawdown. Yeah. So it was at that point that I realized that I couldn't make money just from the depth of market, was my conclusion. So I had been through it, and I was like, maybe some people can do it, but it doesn't seem like I can do it for some reason. And, you know, I think when I look back on it, I think that I had a lot of good information, but probably outdated information. Like, there's probably, if I was trading in like, you know, 2005 or something like that, it probably would have worked really well. But now the robots have taken over such a large portion of the market that the strategies that I'm talking about, especially on the 10-year, you've got to have a good spot in the queue to really get away with it. So then I started trying to expand things out. And every time that I go in and I look at like a technical edge, I can find technical edges, but like, or I can like get you a back test that is profitable. But when I look over it, I really have to reduce the number of trades to get it to be like that, which suggests that you're overfitting is the way that I look at it. So these robots here, let's look at what they're doing right now, actually. Where'd you go? Control center. Okay, so these two guys, they haven't taken a whole lot of trades today for whatever reason. That's interesting. These two guys both went long and lost on that trade. Now one of them has gone long and one of them has gone short. Okay. I actually think, given the macro context and everything today, that if we continue to move up, these robots will do really well today, because that's the kind of what they've been tested. That's kind of what they've been trained to do, right? But then I started looking at the news, and when I started looking back at my trading and like the times when I did the best and like my best trades, they were all news trades. And I even went back and found out what was specifically going on. And it wasn't just like they were news trades. It was like the initial move came out, the market thought this, and I said, well, but this number means this and whatever. And I kind of waited for a little bit. And then when it slowed down, I got in the contrary trade and it went my way. And you can watch the video that I posted yesterday about trading the news, and I go into those. And it was at that point that I realized, the retail trader's edge is the information. The robot doesn't know this stuff. The robot can't they're trying really hard to factor it in, but the robot can't really know that that's why they're segregating us. That's why they would love for us to all trade the micro. When I look at this one and I see that my J on MES does really well and this other J on ES doesn't do very well, that says to me, it's because it's the retail traders. What it's doing is it's waiting for the retail traders to all be going a certain way, and it's pulling its bids to avoid taking trades. And then when it subsides, it buys it and it takes it back the other way. Does that make sense? That's what I seem to be learning from Jay. And So that's why Citadel is like paying for all of the Robinhood orders. Everybody says that it's like they see your order so that they can change the bid or offer 5 cents and make 5 cents every time that you trade. I don't think it's quite that simple. I think that the main reason that they want to be able to use it is so that they can immediately see when there's a rush of retail traders going into something, and they can adjust their bids and offers accordingly. So that they don't take on a bunch of inventory from informed traders, because that's where you guys beat them. So then all of a sudden I realized, my edge is the edge, the more reliable edge here is actually the news, because it's too hard to compete with the robots. That makes sense. I like went like way too deep into that. When someone posts a wall of emojis on other channels, bots removed. Do you want a wall? I'm okay with it, especially if they do the $1 channel membership and use the special emojis that we've got for you guys. What's an uptick rule? That means that in order for you to go short, it has to tick up first. Any idea to AMC? I don't know. Well, so what are they doing in the pre-market? Down 28%. It looks like the GME has actually retraced a significant portion of its losses. Well, about 10% of its losses. So we'll come in here. This, for some reason, acted like there needs to be a button that says go all the way to the right. Like, how do you do that? And how do you get rid of these stupid arrows? I don't get what that's all about. Oh, there we go. I'll do that. Give me a little bit of space. 2 minutes. Yeah, let's wait for the open and see what they do. And I will pull open the ES here. So also, I have to say thank you guys for all coming back, because today I didn't put GME in the title and we still have about the same number of viewers. So that's good. That means that we pulled in a lot of new long-term viewers that are coming in every day. That's great. Anon says, thanks. Oh, and look, he has the little thing next to his name. Thank you so much. Thank you so much. Now, with all that said about informed trading, that doesn't mean that we can't still find some technical edges and other things. We just need to keep digging, right? This thing with Jay, maybe it works out. So I'm reading a book right now about, and this guy goes, it's, I forget what it's called, but basically he's talking all about, like, there's all these issues, like you want to go in and you say, is it long or short? Well, it depends on what time frame it is. And how do you sort all that out? Like, what is the appropriate time frame? And like, it's constantly changing and all of these other things. And it sounds like he's done a lot of really quantitative research on this, and that he has a system for him to determine what regime are we in. Are we long or are we short? So I'm really excited to keep reading that book and seeing if we can incorporate that. Okay, so GameStop actually pretty good jump on the open. $10 at least. Okay, so E-mini trading very tight. And a lot of, well, so let's see here. The cumulative delta is slightly to the sell side, but it's going both ways, and I don't think it's can call it yet. It does look like they're gonna buy it. Yeah, okay. Hopefully I don't get trapped like we did the other day. So this is eerily, well, The other day there was a much stronger buy impulse move, but there was still kind of that sort of thing where it came back to where it was at the open and they battled a little bit and nothing happened. Well, okay. That was a good little slip. GME is jumping there. I have to say, like, I really don't think that all of this overnight action is... Yeah. Can futures halt? They can, but you really have to get a move to get them to halt. and I kind of wonder, like the only way you're gonna see like the S&P 500 futures halts is like if the economy is falling apart, like the pandemic. And I even kind of wonder if, I kind of think that what happened during the pandemic was a little crazy, and so I kind of wonder if it would really happen the same way next time. Can you tell us what you're seeing with GME at the opening? So I'm not necessarily seeing the volume. There's 6 million shares. We can look at that. It's really hard for me to judge volume on these stocks, to be honest, without a DOM. And I can kind of see DOM stuff, but it's not the same. And I just can't make the same read that I can over here in futures. But what I do see is that GME jumped a good 15 points on the open. So you know, under normal circumstances, and when I say normal circumstances, I mean like there's not any real fundamental reason for that asset to move, and we still got a big gap like that, then under normal circumstances you would close the gap, right? So there are some traders there trying to buy it on the open on that trade. We'll see if it works out. Do you see how quickly they sold it back down? So that's where I want to be able to see, like, when I'm over here in the treasury, okay, or in the E-mini, right? And I see a move up like we just saw that move from 02 to 05. So question, how did that happen? How did that happen? Well, look over here. Look at, where is it? Where's my pen? Where's my pen? Because this is actually like a more perfect example. I didn't even notice. But look. Do you see it? Where's my freaking pen? Pen. There you are. Do you see it right there? Look at the screen. Upper left. Do you see it? Do you see? I'm like that creepy guy on South Park that was showing him his home videos. Do you see? 3801, 574 contract spot. Okay. So now let's come back over here and look. 3801.25. Okay. And look, there was a little bit of volume here, and then all the way up into there. Okay, so what does that mean to me? That means that market makers didn't necessarily pull, but that buyers were extremely aggressive through here. Yeah? Extremely aggressive. So now we know, right? Now over here in GME, I can't see. Did somebody just sweep down through and like, how did that happen? Or was it just like they pulled, you know, like polling matters too. Don't get me wrong. I think that a new trader's, one of the big mistakes that they often make is they think, oh, well, it only moved because they pulled. It only moved because it pulled, so that must mean that it doesn't actually mean a thing. No, actually, it means a lot. It maybe actually means more than when a lot of volume pushes through, because it means that something happened there that changed everybody's perception of the asset, and it was so much consensus that even the market makers pulled all of their orders and weren't taking it. That's how I read that. GME news on TOS, Musk don't quit much. It is halted, it looks like. Yep, no shares trading. dropping 42% at the open. And then what's going to happen? They're going to open it back up and then it's going to keep going. Now, I've been wondering a couple of other, now that I'm thinking about it, I'm wondering a couple of other things. Like, one thing is that, like, there were some funds that owned a lot of shares, right? So you'd think they shut down the trading in Robinhood and some of the shorts got out. I think that if I was one of those funds, that I would have to be thinking that I should take some profits, right? Do you know the answer? I didn't see your question. Would larger players get better borrowing rates on the shares they short? And where do they find that many shares to borrow? I don't know that much about the stock market structure. Well, that's a good question. So I don't know how they find, like, the rate that they get. That's actually a good question. I don't know if it matters. How do you know what you're talking about? None of us know what we're talking about. I've been so if you're watching this and you're like, why should I listen to this guy? Because I'm not going to come in and I'm going to tell you I am the profitable trader, and if you follow me and do everything that I tell you to do, you will be profitable too, because that's not true. I've had periods where I've made money and I've had periods where I lost money. In 2020, I lost money, okay? I'm kind of excited to write it off on my taxes, actually. But here's why you should listen to me. Because I am showing you a part of the market and an analysis of the market that hardly anybody in retail looks at, right? We are watching the depth of market and the order flow, and we're using that to determine what do informed traders seem to believe about the market? What do the market makers seem to believe at the market? If the market is, something comes in and the market makers decide to pull all of their offers, and then the market trades up through this area, and you can see there's a really good example right here. Look, hardly anything traded through from 05 to 08. Okay, why is that? Because the market makers didn't want to hold liquidity there. Nobody wanted to sell there. That tells us something, right? Do you see people discuss that sort of thing in stocks? No. They come in and they say, well, it's going down on low volume. That must be there's a short ladder attack. Well, we know from order flow that that's not quite how it works, and that it's entirely normal and in fact desirable for price to move without a lot of contracts trading. That's the kind of move that you're looking to catch, because that means that you saw something that predicted a price movement, and now everybody in the market agrees with you, and so they moved it up into a new price zone and you can get out. That's why the short interest was over 140%. Yeah, they can short over 50% of the float. That's true. Oh, Joko, you signed up with the Yada code yesterday? Thank you very much. It's fun. You know what we should do at some point? I think we want to, once we get to, if I can get to gold, because my goal is I want to do one per week. I don't know, it's kind of weird because I'm not necessarily the kind of person that is really push something. But with Yada, it's it doesn't cost you anything. Yeah, you're putting money into a savings account, but it's still your money. You actually make money from doing it, and everybody should have a savings account anyways. So it's there's no reason not to share it with everybody and get them to sign up for a Yada account. So for those of you who don't know what I'm talking about, you can sign up for Yada. It's a savings account, but instead of paying you interest, they give you balls into a lottery based on how much money you have in your account. And so it's like a savings account, but you will actually make more than 1% a year on your savings account, and it's more fun and it keeps you engaged and thinking about saving. Balls, yeah, you get a ball. Anyway, tickets, anyways, and so I have a link in the video description, and if you sign up, then both yourself and me, if you use my referral code, Speculator Seth, you will get $10 essentially in tickets. I mean, you'll get tickets, and on average, when I've been doing it, it comes out to $5 to $10. Okay, so like you're making money, and then what you should do, like honestly, just think of it from my perspective. Everybody should have a savings account. It doesn't cost them anything. They actually make money on it. It's fun. You should turn around and you should get your parents and your brothers and your sisters and everybody else, and you could make like $50, $60 off of that. So yeah, but thank you for signing up. There's also now apparently there's pools, so you can all contribute shares into the pool, and if the pool wins, then the winnings are distributed amongst the pool based on how much you contributed to the pool. So that's fun. Is AMC getting hammered pretty hard? 43%. Oh yeah, $7 now. And it looks like the silver one is getting hammered pretty hard too. So the struggle I'm having right now with trying to analyze this market is that like this doesn't look to me still like all of the Reddit traders are like don't believe in it anymore and are bailing. This looks to me more like that there's nothing they can do because they can't buy anymore, and so the professionals are just slamming it. The GME, no, it's still trading shares. Okay, so they're pulling back a little bit. So also, do you see? So I can't. Of course, I can't see like an order book, but well, I mean I can do this. I don't feel like that when I look at the directed trade and extended hours thing, that it really shows me. That it really truly shows me what we need to be able to see. Okay, but when you come over here and you look at this, okay, so like there's some buying. Well, there's some ones where I can't really tell because it doesn't know where the best bid and ask is. Okay, but then you look at the sells and it's like there's like hundreds coming through. You see what I mean? Okay, so there's some big buys. Can we just like make this portion like the whole screen? No, that's not what we wanted. There we go. And let's just watch the volume here. It goes through so fast that it's so hard to see. Hundreds. Okay, there's a 2000. Oh man, that's so fast I can't even see. I wish there was a filter. Life savings, not my life savings. Look at that. That is so ugly. Somebody must be getting like a margin call or something, man. Are you taking a long? Oh, wait, did you take the long? Oh, you got there. Okay, you took short at 38.07. So how much did I make off of this? Is it $50? $70. I feel like that I got my trade in the E-mini and that I should just be done with that. Do you think? Have you guys seen the bots on Reddit? Oh, I don't know about. There's certainly a lot of activity from accounts that I am suspicious about. Yeah, but like it doesn't prove that like what their motivations are or anything like that. Could just be like new accounts. You think it would be lucky to gain 200? Well, it's fine. I'm gonna hold it. I'm gonna hold it for the 5% chance that it goes back up to 1,000 and I can laugh at you for the rest of the time. $100 is not fair, more like $10. I don't know what fair value on this would be. All I know is this, is that if they open up buying on Robinhood and all of the other brokers again, they're going to buy this back up, at least for a time. You've been duped. Well, how much money did you put into it? One share never hurt. Yeah, I only did one share. You can go short if you want. Oh, I wouldn't. I wouldn't try and short this on the way back down. No. Crazy GameStops themselves haven't said anything. Well, what do you want them to say? No, I don't need to set my stop under 80. No, I didn't put the life savings. I own one contract and I bought it at 250. And I made 240 from the first trade, so. Oh man, sorry to hear that. Oh, it was one contract. You guys are so funny. Oh my gosh, Seth understood that this was an extremely risky trade and only risked the minimum amount possible. And even then, through his scalping, he was able to make it so that the maximum loss he could possibly get, even if it went down to zero, was $10. He's so stupid. Come on. I love it. It's so funny. Here's the thing that I think is so funny about some of this stuff is like you come in and chat and you're like, oh, you were wrong. You should be getting out. You should like, do you guys, some Eric Cages, you've known me for like 3 years. Like, he's probably saying that because he knows that it's going to make me hold on. Like, I am like, not very susceptible to peer pressure. I've always been the person that's like, everybody else is doing this, well then I don't want to have any part of it. This GME thing was like a one time a one-time departure from what I normally do, because I saw how much well, for 3 reasons. 1, because I saw how much attention it was grabbing. 2, because I had seen this happen before and I wanted to get into it. And 3, what was 3? Oh, and 3, because there's, I felt like it was making a statement. 3, and that's why I did it. Oh, we're talking about another guy? Oh, okay. Yes. Over Mars. Yes, if you're looking for the next big thing, get into Garlic Coin, though. That one. I'm not going to pump and dump Garlic Coin. Garlic Coin is going to take off. I'm not going to need to do anything, and then I'll be a millionaire. It might take 10 years, but at some point. Because remember, Garlic Coin only has 69 million coins. 69 million, okay? This Dogecoin that everybody's getting into, unlimited number of shares. It never goes away. You can mine it forever, and you can mine a ton of them. That's the whole thing with Dodge, is it was designed to be completely worthless. Okay, what was Garlic Coin? Garlic Coin said, oh, meme coins do really well. Let's make a meme coin, but let's make our meme coin rare so that over time it will increase in value. Do you think that once it's all mined out that maybe it will increase in value? We'll see. Maybe I will go in and I will start burning some of my coins so that the Garlic Coins become even more valuable. Or if you really want to do the pump and dump thing, I'm not going to encourage, don't pump and dump, okay? Don't do anything illegal, okay? And if you have a position in something and you tell people to go out and buy it and you don't disclose that you have that position, that is immoral, okay? But all I'm saying is that you would have a really high impact on Garlic Coin. Even if you were trading $100, you could like double the price of it. So if you're like a big fish, quietly acquire, and you could probably quietly acquire quite a bit of Garlic Coin, right? And then just bump it. Just bump it. And people do it from time to time, and it goes, and it's actually got okay bullish price movement too. I'm just saying, just take a look at it. If you haven't taken a look at the Garlic Coin, go take a look at the Garlic Coin and maybe acquire a few thousand of it. Okay, so on the GameStop move here, there was quite a bit of a plunge after it finished. What do we say? The halts. But they're up, and now we've got a higher. This candle looks like it may close above the previous candle's high, so that's good. Putting my life. No, stop, guys. Don't put your lives. Listen, diversify your life savings. If you're gonna YOLO all of your life savings into something, put it into an S&P 500 index fund. Otherwise, diversify. Is silver up? Let's come back over. I can't. I don't know. I don't know what I want to do. I don't have enough screen real estate anymore, guys. I need another screen. I could put another screen right here, I guess. I guess I could get a different stand and have one of those 2 stackers and put it over here and have to. I don't know. It's either sleeping on the roadside or sleeping in a Lambo for me. Oh, epic lagger. That's great. So I'm looking at like the waves coming in here. Do you see how it's like the buying is actually pretty steady, but then when they're selling, it's like this wave of selling comes and it comes down? There really is a really interesting imbalance here. It really does look to me like the buying is coming from largely from small fries, and that there are some relatively large people out there selling it. The S&P 500 isn't designed for. Come on, it's a great. Why the S&P 500 and not other indexes? Because it's the most reliable. So right now, it might look like Russell stocks look really great. And actually, probably putting a good portion of your money into Russell might maybe make sense. I'm not giving you investment advice or anything, but I'm just saying it like it's doing really well right now. But when you have like bad downturns, there are periods where those small cap stocks like underperform significantly. So the reason that people go into the large cap stocks, the S&P 500, is because it's more consistent. Do you think Jimmy will get another whale buyer? I don't know. I just think that at some point, Robinhood has to open up trading in it again, right? Like, I don't get why are they not allowing trading of it? I don't get it. Well, I mean that the S&P was made as an overall index for tracking the stock market. Yeah, there's definitely some problems with indexes. Don't get me wrong. Could a buy-side whale force the price high enough to create a margin call situation? I think that with the unbalanced market that they've created by shutting out all of the retail traders, it's like if I was a whale, you notice that, before I was like, oh, if I could get a second contract at 100, I would do it, but I'm not doing it right now. I see a reason for me to hold on to the risk that I've taken because I have a really good risk reward, but I don't see a reason to add a contract here. If Robinhood trading was open and it was starting to move back up and I saw some momentum coming in off of that news, then maybe I would add another contract, right? But at the moment, you have an imbalanced market, and so if you were a whale, I don't think that this would necessarily be a very effective place to deploy your capital unless you were really sure that it was going to go back up. I would have to have way better data than I have right now. When Robinhood first started suspending buying, there was a thread on Reddit from a user claiming they worked there and overheard conversations between Vlad and White House representatives and hedge funds. I mean, unconfirmed. Yeah, there's been a lot of threads like that, right? Never confirmed. Yeah. But that's what's going on with like literally everything on Reddit. This is the problem with Reddit, man. It drives me crazy because everybody said it was the Donald Trump supporters believing in all those crazy conspiracy theories, and now that they're off of our website, everything is fine. No, it's not. It's Reddit, guys. Reddit is prone to unconfirmed information, because if all of the information is out and people still want to talk about it, then what they will start doing is they will start going into less reliable information. So then they're like, well, there's like this conspiracy theory and this conspiracy theory. And then people start believing the conspiracy theories just because they read it, even though there's no verified truth. And then all of a sudden it becomes the reality for some people. And so they upvote it because they believe in it really strongly. And then that's always getting up to the top of everything. And now everybody believes in it when it was always complete nonsense. Oh, Reddit, you've got a real problem. See this, like the short ladder attack. I don't think that's a thing. It's matched on the buy side, suggesting there was a well supporting price around 320. Reddit is so useful. Well, there you go. I don't know if like here's the issue: is that what people on the internet believe or falsely believe at something seems to be a poor indication of what actually ends up happening. From I've seen. It was so much easier to realize the opportunity was gone by the time I found out about it and just not participate. Wall Street Bet's general sentiment is very comparable to QAnon. Well, but here's the thing is that I don't, this is the thing that I find really, I always say that this is the thing that, because I probably said that I already found something to be the really interesting thing. No. But something that I find really interesting. If you go over to the Donald, I think they have to go to, it's patriots.win now is what it is. Yeah, patriots.win. They're not talking about it. They're still making memes about the election being stolen. By the way, there's negotiations going on between Republicans and Democrats right now about the size of the next stimulus, with a group of Republicans trying to push a $900 billion stimulus instead of the $1.5 trillion stimulus that the Democrats want. They met with Joe Biden yesterday at the White House, and it sounds like that discussion was productive, but that the Democrats are going to just try and shove their thing through by voting in it in the House and the Senate and then using the reconciliation process to push it through. They're not talking about that at all either. They're still talking about election fraud. And I'm like, this was like your thing. Like, this was the kind of movement that you guys should all be getting in on, and they didn't care. So who are all of these guys like on Wall Street Bets and stuff doing all of this stuff? Well, like when I start like going through accounts and things like that, they're I'm not going to say that they're liberals, but they're people from affluent areas on the coasts. You know? So, like, I think that they're generally Democrats getting involved in it. Isn't that interesting? So you say it's very comparable to QAnon. Okay, yeah, but they're Democrats. So does that mean that the Democrats are just as prone to conspiracy theories as the Republicans are? Yes. Because everybody is just as prone to conspiracy theories as everybody else. And maybe the only reason that I always seem to be against them is because I'm on Adderall. I don't know. I guess that's what we're here to disprove, right? Yeah. Well, there's the thing that bothers me so much. It's like, I totally understand do you see like the selling, like the flashes of red that will come through? That's something. Okay. It seems to me that when you, man, I just totally lost my train of thought. Jeez. You just described all social media, and I was saying, oh yeah, like the thing that bothers me is, it's like, if people put out a theory about something that's going on, and they present evidence for and against that particular thing, but they acknowledge that it's a possibility, but that there's no evidence to directly support it. Like, that's one thing. But what I'm seeing on Wall Street Bets is people developing this entire narrative based off of something that, like, just isn't true. Like the short ladder thing, it's not a thing. I mean, like it is a thing, but like, just because you see a price falling and them not trading very many prices and only a few contracts trading back and forth as it goes down, that doesn't mean that two people are colluding to make that happen. That just means that the market maker is pulling his bits, you know? So like, it's a thing, but it's not a thing, because to prove that it was a thing, you would have to prove that these two people were like coordinating what prices that they were going to buy and sell, right? And then you would prove that you have that you have false stuff. Oh, thank you, Uzi. That's wash trading and it's very illegal, so it's not happening. Well, yeah, it's like you could be wash trading, or a short ladder would be a form of market manipulation where you're making it appear that there is certain activity in stock when there really isn't. Okay, yeah, that can be a thing. That can be a thing, but in order to prove that that's happening, you would have to prove that these two people are colluding. You can't just look at it and say it's going down on low volume. That's a short ladder. Like, otherwise we'd have to come in here and say, oh, guys, this market action here this morning, look at this right here. They traded through this, only traded 81 contracts at 3804.25. That is a long ladder right now, guys. They're pumping the S&P 500. Where is the SEC? Where is the SEC? We'd have to say that literally every day about every move, right? The whole narrative is based on ignorance, and it's false, and it's like there's the reality to them. If you say that it's not true, you get downvoted to like 100 plus downvotes. It's crazy. Is that fine likely to be less than the fallout if there was a large short squeeze? That's a good question. Yeah, what do you expect from 5 million users that mostly know jack squat, right? It is. Well, that's just the whole thing. So, like, when I look at this trade, it's like, okay, so, like, we're in a trade with a bunch of idiots. Like, but then I keep coming back to the thing, which is, like, the short interest, okay, I don't know how accurate it is, but there is that S3 data, right? Everybody was getting in on the S3 data. Remember, the S3 data, they kind of changed how they're representing their percentage. They're seeing it 50%, and so everybody says, oh, so the short interest dropped from 100% to 50%. That's really bad. No, that's not what happened. They're using a different metric of saying what percentage it is of it. If you go to the metric that everybody else is looking at, which is the percentage of shares short compared to the number of shares in the float, it is still over 100%. According to the information that I have read, at least. I don't want to sit down and say that's the gospel truth, but I looked at the numbers, I went and I did the math, and I believe that explanation. And so it's like, you should stay in it, right? Well, we'll see what happens. Truly, honestly, I forgot the basis on which most people bought this on. Really? They have the power to surprise, yeah, but not the power to win, because everybody knows what they're doing. A guy on Reddit screenshotted his Bloomberg showing the last update is 122%. So then, yes, the short interest is still greater than 100% of the short, right? Like, it seems to me like the trade is still on. Like, I think, well, I don't know. There's probably a way to calculate it, but I feel too lazy to go in and think about it. But I'm wondering if one of those large funds, like maybe Vanguard, is selling shares, right? I don't think that if I was Vanguard and I was selling shares, I don't think that I would be doing it the way that it's going on right now. But maybe there's some forced margin calls in there too. That would actually make a lot of sense, that there's some guys on Reddit and they're holding it, but they ran out of margin and they puked or whatever. But I was just kind of wondering, like, as this is going through, like, let's say that it is one of the large funds are, taking some off, then do the shorts taking their shorts off here against them as that's falling? But then, like I was saying, if I was the fund doing that, I would only be putting limit sells out. I wouldn't be forcing it down. Traders gonna trade mugs are available. Thank you so much, Win. Here's a picture. Here's what it looks like. And it's a great mug. I don't drink coffee, but it's a great mug. I need to get like I don't know what we should do with behind me. See? We've got that corner. I'm thinking like we need to make like $100,000. And then if we make $100,000, we can get rid of that big huge hutch over there, and we can like buy a fish tank or something, and then we can make a shelf over here, and we can put stuff on the shelf, and we can put the Trader's Gonna Trade mug on the shelf and be right there so you can always see it. And then we can also have like an LED scrolling sign right there, something like that. That's what I think we should do. What about putting up your green screen? Would that buy you some more background space? I could do a green screen, but I think it's more fun to have a background. Why no coffee? Because it's bad for you. You know what? I don't react to caffeine the way that normal people do. Caffeine isn't very good for me, so. Well, no, it would be like a tropical fish tank. No, I'm going to buy like a $5,000 fish tank. That's what I want. So I was like, my wife, she had fish and she wants a saltwater fish. And I was like, well, we can just get the pieces one at a time. And I was looking it up and I was like, oh, here's a fish tank that it says it would be big enough to do tropical fish. So let's go and get that for her. So we went and we looked at it and she was basically like, no, that's too small. I want like a big fish tank. And so then this guy was like, oh, like this one. And it's called a Red Sea. I'll show you. We'll find it on Amazon. Red Sea fish tank, I think it is. It's a red something. Here we go. RedSeaFish.com. This right here. Reefer Deluxe. Look at that, man. This one right here. Ooh. It's huge. 120 centimeters wide. It's got these cool lights that come up over the top of it and everything. Yeah. That's the fish tank that I want. That's what she wanted. And so I'm like, oh, okay. Red Sea. Oh, here we go back. Red Sea fish tank. I think you can find them on Amazon. Could be wrong. Or let's just go to shopping. There we go. Okay. Red Sea Reefer 3XL 900 white 240 gallon fish tank. $5,000. $5,000. So we got there and was like, well, we can't spend $5,000 on a fish tank right now. And she's like, it's okay. It's too much work right now. I don't want to take care of a fish tank right now. I was like, okay, well, whatever then. But someday, maybe in the future, when I'm a millionaire, Look at the secondary market for fish tanks. That's a big, good thought. Red Sea. Let's go to KSL. I don't think that they'll find that we'll find that specific one. Probably find some OK systems, so Red Sea. Oh, look at that. There's a nice little one. Red Sea Reefer 170. Do they retain their value? It looks like they do. I mean, you're paying for the glass, so would make sense that it would retain its value somewhat. By the way, where did I get out at? I got out at 09. So I missed out. I could have gone for the longer target. Do you think I should have gone for the longer target? I guess probably. Do you have living coral? No, I don't have any. She had a tropical fish tank, not a saltwater fish tank, but just tropical. But when we moved, she took it down. And I have the tank, she had two of them. And so she gave one to her ex, and that we have the other one. So it's sitting in the garage, and we haven't done anything with this. So we could get a tropical fish tank, but I don't think that she wants to do it right now. Mark Cuban is answering GME questions on Wall Street Bets. Really? Did you check? I definitely did check out Raging. Let's call him Raging Kitty, shall we? I definitely checked out Raging Kitty's YouTube channel, and I was impressed with it. I was kind of like weirded out by how long his streams were, and he's definitely got a unique personality. Let's put it that way. I'm not trying to say that he's like fucking weird or anything, but like, man, that guy goes off on tangents. Like he seems neurodivergent to me, but it could be wrong. He's not neurodivergent like, he's this autistic retard. No, he seems like he's a very socially adept person, but he does seem to have a kind of like running on a different wavelength somehow. There's just something off about, like, he'd go into something and then it's all the way over here and then back. But that's the way I am. So maybe he's ADHD. That would make a lot of sense. Anyways, he had a good channel, and he has an approach. He wasn't just like gambling, like he had an approach and he was executing it well, and a little bit of luck on it, and he made the trade of the century. Well, retail trade of the century for sure. Yeah. I think it's funny. Like, I remember that was another thing on the GameStop thing, was like some people on TikTok were like, this GME thing, like, why would you want to get into that? You're all crazy. And I'm sitting here like, why would you sleep on the greatest trade of all time? Like, I feel that GameStop is like the greatest trade of all time. Well, maybe if this falls apart and we've already seen the all-time high, then maybe it's not the trade of all time, but this will be a movie, and Seth can have a part where he's running daily commentary and Eric Cages is pissing on everyone's party. Well, I thought that they were going to make a movie about my Bitcoin indicator and how we made $1 million off of it, but the market just keeps, nobody believes me. And even though I've made money off of it, I haven't been able to like size up like super crazy on it, so it's unfortunately, it seems at the moment that it's better at finding overbought conditions than it is at finding oversold conditions. But I think that the only reason that is because the Bitcoiners just like refuse. They are so entrenched in it now that they just like refuse to stop buying it. Did you read that thread about Melvin's shares being counterfeit? I did, and I found it interesting, but I didn't necessarily see that information being like conclusive. So they're going through and they're looking at like, if you add together all of the shares that are out there, it is more than have actually been given to the public. But I don't think that that's sufficient enough proof. I think that there could be a lot of reasons why it would add up like that we as retail traders wouldn't be aware of. So I'm not so sure that it proves anything. I do think that it would warrant investigation, but maybe the guys over at the SEC know why that is and know why it's not something to worry about. I don't know. Or maybe they're doing it right now. Mark Cuban said to hold. So let's go and read what Mark Cuban is saying, shall we? Reddit. You better be like the first result. So I don't want to be searching. Hey, I'm Mark Cuban jumping on to do an AMA, so ask me anything. Oh, wow, so many comments. Wow, let's go. Top one. I love to see the companies I own shorted. If it's a company I want to own, I know the shorts can be squeezed. And if the company does really, really well, then the shorts will have to cover, creating more demand for the stock of the company I own, pushing the stock price up. Back in the day, I used to run a public company. I used to tell anyone and everyone I knew who didn't believe in us to short the stock. As far as naked shorting, that's not really a thing. Yes, there can be more shares shorted than there are original float. That is by design. If I borrow stock from you to short, when I short it and your buddy buys it, then they can loan it to someone else to short, etc. And all of those people who borrowed the stock paid to do so, and they realize that if enough people buy the stock and ask for the shares, they will get called in. So the chain of custody is there. The system is doing what it's designed to do. So again, the more people shorting the stock, the company I own, the better. Where you have to be careful is when the shorts are in the stock because the company is a fraud. If I short stocks, it's only in companies I think are fraudulent and ripping people off. I actually produced money about one element of this, the China hustle. I think he meant to say a video. Okay, well, I thought that was really great advice. First of all, but where did he say holds? Oh. The SEC is a mess. I wouldn't trust them to do the right thing ever. It is an agency built by and for lawyers to be lawyers and win cases rather than do the right thing. Amen. I'm sick of seeing fraud every day and the regulatory industry is doing jack squat about it. And when I say fraud, I'm talking about like real provable fraud. People scamming people out of thousands of dollars a month for with exorbitant claims that have no basis in reality and are just outright lies, and they don't do anything about it. YouTube doesn't do anything about it. The SEC doesn't do anything about it. The FEC doesn't do anything. Well, the FEC finally pulled their head out of their butts and took out at least one big guy, but there are so many people on YouTube doing this. It makes me mad. Regulators. By the way, the E-mini is just going and going. Where are we on? So when I see something like this, right? Like I took a good trade, but I could have held it a lot longer, right? So then I have to sit down and think, okay, what are some things that maybe I should have looked at that would have told me that I should have held it? By the way, you see that big order at 38.31 and the big order holding them up at 38.27 and 3/4? That's interesting. Like they fill them and now they're going to bump back up. That's funny. So first of all, where are the volatility targets? So that is maybe one thing that we could have looked at that could have said, there's probably a lot more in this. Okay, so the first volatility targets is 38.20. Oh, well, we're past that. So now I would definitely, if I had stayed in that now, I would definitely want to be thinking about taking profits. Let's see here. What else? So here was a 7:30 move. Here's where I got out. It did pull back, so it actually was a great exit. The R squared started picking up there, though. We never passed the ATR stop. We did stop out the shorts. Actually, they've been riding, man, anybody that's trying to market make short on today's move is just going to get destroyed. Oh my gosh, now my robots didn't take that? What? I mean, Brandon and Indy both took trades. Why did Joseph and Squire not take one? Oh, you know what? No, Joseph should take Indy as I must not have them set up correctly. Because those should have taken trades. Let's look at these. Here a second. I'm sorry, you guys are probably asking me like a ton of stuff, and I'm like, not doing anything. Okay, let's try and pull up. Let me just double check something here. Make sure that I've got this all correct. So I thought that I had them all set up so that like the default settings were the most optimal, but maybe I didn't actually. Okay. Huh. No, I have some of these are at 0, and I don't know if they should be. You should have loss limits on for starters. Oh, that's right. We added all that stuff for acceleration. It doesn't. Those things don't matter. Fast, slow, and smooth are what matters. Fast, slow, smooth, stop. Streak limit, use loss limits. Well, let's just pull this up over here like that. That'll help. Oh, it doesn't like it because it changed the settings already. Okay. And this one, oh man, I put a bunch of settings on that guy too. Yeah, that has too many settings. Oh, that's right. This one always had a lot of settings because, yeah, I see. Okay, but what I really cared about is that I was using it at 1 minute on that, and was definitely using a 1 minute on that one. Well, that one maybe he didn't trigger for a reason. And Brandon and Indy both took trades. Yeah, I don't know. We'll just have to run it. I think they said something the other day. Volatility targets, you mean market's expectation of a potential move? Well, yes, exactly. So I'm using what the options are pricing in and dividing it by, the number of days that it's looking for, and using that to determine how far they expect the market to move on any given day, and I'm looking for that as a target. So they already touched that. They touched that at 38.20. Then you go much further. If we were really to have like a trend update, it would be 38.63. So one thing is that I could do is I'll get in, right, and I'll say, okay, I want to get like this initial move, and then that starts distributing, I get out. So do you see here? Especially since a volume profile formed there, that means that it was an acceptable exit point. If it had immediately swept even further, then I would really have to be saying maybe I would have been justified for me to move my point. So, but because it kept moving, now I have to start thinking, okay, well, could I have looked at what I know about the sentiment and everything right now to determine that I could have extended my target? And I suppose I could have, But in this situation, I think that it would be, I can really only say that in retrospect. At the time, I don't think I really could have known that the macro framework was really strong enough for us to move up that quickly. So I believe I did the right thing, but we'll see. Well, not we'll see. I mean, that was just, and that's my analysis of it. And I think taking one trade and getting $70 off of it is great. So I've actually been doing, like, even the days where I've done really bad, I've made it back and came profitable. I think almost every day since this whole thing started. So that's good. I'm sure that I'll be humbled here at some point, but let's see here. I learned some expensive lessons when this is Mark Cuban. When I first started trading stocks, it was painful, but I tried to learn what I got right and wrong right now, right here. The game is changing. The hard part is to ask yourself what you believed in has actually changed, right? That's exactly it. Bitcoin holders are a great example to follow. Many bought at the highs 2017, watched it fall by 2/3, but they held on. They believed in the asset. Well, so, I mean, if you bought it in 2017 and you held it through that whole thing, I think you're stupid, but same applies to stocks. If I buy a stock, I make sure I know why I'm buying it. Then I hold until I learn that something has changed. The price may go up or down, but if I still believe in the logic, that's the way that you should trade for sure. He's giving good advice. Patience. Yeah, Mark Cuban, there will be class action suits and you will win. And after legal fees, you will get your $4 settlement, right? Like we won't get anything from it. It's so sad. I don't see him saying hold. What's the price to sell at? I typically don't set price targets on the upside. On the downside, when I was just getting started, I would set a stop loss at where my margin call would start. If you can afford to hold a stock that's going down, only sell if the reason you bought the stock has changed. Okay. Well, yeah, I don't think him directly saying that, but maybe somewhere in there he did say that. But I just didn't see it initially. Miss Lisa, I advise everyone to look for an easier and faster way of making profit to invest on cryptocurrency, well-known verified binary account manager. Huh. Why are they blocking me from buying bananas? Yes. Some of these people were just in it. That's the thing that really frustrates me, is that a lot of people were just in it for the memes and now they're staying for the conspiracy theories. Like, well, it looks like that price is failing here again, and there there looks like there is some support at a dollar though. Let's see here. Can I see that far away? Not quite. I mean, I love that I got this kind of depth of market thing here and everything, but it just doesn't show me enough, man. Look at those. Okay, so there are some big buys down in there. Oh, there's a big sell. That's what that is. Look at that. Ugly. 2,000. I would have thought it would be more than that. But I don't know. Yes, the fundamental thesis hasn't changed, being that the shorts haven't covered and that there is still potential for short demand because of it. I agree. Well, you're correct. That thesis has not changed, but something has changed. And that something that has changed is that retail traders can't buy it anymore. That matters, right? Like, something did change. It wasn't in your fundamental thesis, but it was a piece of information that comes along that I think if you were to have if you had gotten out as soon as Robinhood wasn't able to trade it anymore, I think that would have been a smart call. I probably should have done. What about the S3 data saying that the short interest is down to 53%? You're misreading the data that they're giving you. So the way that they calculate what the percentage is based off of a percentage of like the overall shares, including the synthetic shares that are created when they go short. But the number that everybody else is using is the number of shorts compared to the float. And if you take their data and you do the math, and I didn't do it myself yet, let's go find it so I can show you. S3 GME shorts. Where do we find it? Let's see if I can find them on the Twitters. Full story here. Like, there's a way to look at it online, right? I don't see the link. Otherwise, check out our short site tool. Get access today. La da 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 da. No, I don't trust you. I don't get it. But I was seeing some people on Reddit, then they were explaining where they were getting the number from, and then they showed the math and showed that it was still like short interest was like 1.22. So that's why I am holding to that from the information that I have, the shorts have not covered. Y'all selling them is making it easy for them, though. Look at some of that selling is just brutal. Look, there's like 500 lots in every one of those waves. So does that mean that the GME is over? No, I don't think it is. I mean, this just kind of takes us back to where we were like a week ago. So if we're back to the prices that we were a week ago and there's still a lot of shorts, then it should still pump, right? Unless this is really giving the shorts like a big opportunity to cover and they're covering it down this whole way. Getting to my ideas of 80s need to hold. Well, that there might be some. So I wasn't able to see here. There was some. Maybe you saw. So we're looking for like, we're going to need to look for a big, like it's going to need to be like in the 10,000s if you're going to see a price that like, that's really going to scare them, huh? But look at the order imbalance. Like there's way more big orders on the short side. Yes, but I'm not convinced of any. I agree with you too. It's dozens. I'm not in. It's the data that we will get next Tuesday. That is trustworthy. The rest of it, maybe it's right, maybe it's wrong. I can't say. Don't really know. Is it done? I don't really know. I don't think it does, but I don't really know. And again, like, this is largely happening because people can't buy it, right? If Robinhood opened up trading of the shares in it, like right now, would it be different? Would they be going up? I don't know. What about AMC? Let's close this because this is just frustrating me watching that and not being able to actually see what I want to see. AMC is down 49%, and silver is down pretty good too. Silver getting down to where it was last Thursday, actually. If I come over here, let's just look at the futures data here. Okay. Yeah, it doesn't look too particular. Yeah, it is below. So they've that right now in silver they're still at like that they've covered the gap, and the silver futures themselves haven't moved that much. Do see the dollar getting stronger today, so that doesn't help. But that might all filter out. There are other traders limiting buy according to Wall Street Bets. Revolut Bank is not letting you buy GME and AMC. The whole thing is just crazy. I can't believe that they just will refuse to let you buy it. This is not right. Like, if you can't cover it, that's one thing. But, like, I don't understand how it's come back down to 90. Like, they should be able to cover it. I don't, you know what I mean? Why are they not allowing the trading to open back up? I just keep coming back to that, and I just don't. I want a good answer for that, and I'm probably never gonna get one. And it'll go down to 0, and I'll be, they'll go bankrupt, and I'll say, but why won't they let us trade it? Okay, well, there's 80, 86. Mm-hmm. Oh, that's right. So I'm just seeing here on Twitter that in regards to the stimulus that the Democrats want is $1.9 trillion. But in order for the Democrats to pass that stimulus through the reconciliation process, it has to be revenue neutral, which means that they would have to raise taxes in order to do this. And I'm not so sure that they will get that. CJ says I posted the most up-to-date Ortex data. Okay, so let's look here. That's too hard for me to read. History exchange reported. Oh, that was that. Where I can't really see somewhere where I actually see like the number to see exactly what it is. Here's like their estimated one, and they're saying that it's like 30 million? Maybe. Oh, wait, maybe it's up here. Exchange reported. Here's the top. Why does it not anywhere on this image show me the actual fucking number of their estimate? It was definitely like this move down here when it was like holding at 100. That was definitely like a dead cat bounce, wasn't it? Let's see how bad the damage is down here, shall we? Oh, ouch. Oh, yeah, but that's because my AGs are probably, I lost all of the gains on that. That's okay. That's okay. Actually still up on the AG shares. That's funny. Okay, well, whatever. Should have taken the profits on that AG yesterday, maybe. Or maybe silver will come back with a vengeance when the dollar starts going down. Or maybe Reddit turns around today. Like, maybe they all give up on it today and they say, the shorts covered, you let the shorts cover, and then they go back for revenge on something else, right? Check the new one. Okay. Okay. So, yeah. Interesting. So this is where we get into this whole other thing that we haven't talked about, and that is, do we believe the number? So here they're saying that the last, because this was yesterday, right? Or no, this was Friday, right? They're saying that from Friday to, well, between Thursday and today, that 30 million shares covered. How is that possible? Right? Because we were only trading like 30,000 shares yesterday. Unless they did it with like a dark pool or something, in which case somebody else is short. Or, well, actually, I could take that back. Maybe Vanguard and the shorts could have gone through a dark pool and made a transaction, right? I suppose that's possible. But we also, this is like this is a model. Like, so think about that for a second. So look right here. So which line is which? The tan, what is the tan line? The tan line is days to cover utilization, free float on loan. Well, I don't know what that means, but this is the estimated short interest, okay? And here is the exchange reported short interest. So how closely does it match? And then when I look at that and I say, okay, so here's a place where they said that the short interest decreased and it didn't, right? Here is a place where they claim that the short interest decreased and it didn't. Is there any on the other side? Yes, there's a little bit. There's a place where they say the short interest increased and it didn't. You see what I'm saying? Like, I'm not entirely sure that, so it coming down like that is that they really cover? Because, like, how did they do that with the volume? So then we have to start wondering, well, what data are they using to estimate this? Because there's nothing that I can see that would allow me to even start thinking about doing that, people who bought at yesterday's close need about, well, it's pretty ugly. Remember when I said that probably that they will have to bounce, and all we got was to 150? Jeez. Oh, the top of the peak was last Monday? Oh, is that like, is each data point a week? Because I on the Monday, Tuesday, Wednesday, that's certainly a large degree of the shorts could have gotten taken off there, right? There was so much trading those days that you could probably get a lot of it out. As a byproduct of synthetic derivatives, you'll never be able to make. Then there was a lot of options expiring too at the end of the week. That's another crazy thing. It's like, okay. Is it the case that like Wednesday, that was the squeeze, and then because Robinhood stopped it, the shorts got off, but the shorts still took it off, and that was it? Now this one, who is it that posts this again? Ortex. It's a different place. Because Ortex suggests that it's done. I don't understand who's selling. Well, like Vanguard could be selling. Fund could be selling. Could be margin calls. Looked at the chart in 5 minutes and had it. Well, yeah, I mean, when you come back and you look at this, all this mayhem back here, right? This is where I'm saying that this right here, this was the squeeze, man. This was the squeeze. And if it wasn't for them shutting down Robinhood trading, it would have been from 500 to 1,000, you know? Maybe. We don't really know. The Ortex data that I'm just showing you guys a screenshot of here. That suggests that it's over. I'm having a hard time understanding how that's possible, but that's what that particular data source says. And that's where I'm like, it seems to me like the data that we get isn't very reliable. And you're at one way or another, you're going to say that we got a data point that was misleading, right? And this is what they would be required to do by a law limit as there was no liquidity? I don't understand. So once again, I have to ask, why isn't Robinhood allowing trading in it? You guys don't even, you should just say yes. Why aren't, I agree with you, Seth. They should allow them to trade it again. I don't know. Smart money. Well, and these, I mean, this time they lost big time. It's just they cheated. They cheated. Maybe it's over. I don't know. I can hold it though. It's fine. I'm okay with holding it. Even if Robinhood removed restrictions, I do actually. I think that at the very least, that just the very news of Robinhood releasing restrictions would probably cause some amount some amount of a bounce. Jeez, like it's just so like down there, it like doesn't even look like a thing. 75. How low could this go? Like 10? Half of Wall Street bets are using, yeah, I mean it really is. And they lost all of their like with it falling down right here, I'm sure that they don't have much money to play with now, right? I think the retail, I agree with you on that. I do think that there would be a bunch of people that would still try buying it. And like, honestly, when I look at this right now, this is a market that is out of balance because half of the market isn't allowed to participate, and not because they all believe that it's over, right? But it certainly crushed their confidence for sure. Like I mean, you can just see here in chat, you guys came out at the very beginning and were saying, "Oh, it's all over. It's all over. It's too late." And it's like, well, but if the shorts haven't covered, then it could still go up. Well, maybe it seems like the smart people think that the shorts have covered. That's what it seems to me. I don't know enough about this thing to know. It seems to me like they think that it happened, though. Are they covering right now with the large volume? It's not a large volume, 33 million. It's not a ton. Because we were talking about something like 60 million shares having to cover, right? Which, if there was 60 million shares on like last Thursday, which is what my understanding was. Now we're saying maybe that they all covered on Monday, Tuesday, Wednesday. I don't know. But if there was still 60 million shares to cover on Thursday, Friday, then there's no way that they covered it all through this. Although this coming down certainly helps them, right? Yeah. Price of GameStop started to go down after Robinhood disabled buying. Since then, more and more companies are trying to restrict buying too. And with that, every day GameStop price is going down. Sucks because you feel powerless. Well, but you're always powerless, right? Do you not? This was the thing that I've the big thing that retail has been saying that's false, because they came out and they were saying, see, we made this happen. We have power now. We can move the market in our direction. No, that's just not true. That's not the way that it works. The only reason that the trade worked was because there was a reason for it to go up. And it would have gone up without you guys, frankly. It just happened to be the case that this time it was the retail players that saw it. See, Blunt says GME short float 121%. Where do you get that? What data source are you using? Because I'm just showing, I just showed you from Ortex. Here's a data from Ortex, and the data from Ortex suggests that it's less than that. The data from Ortex suggests that it is now 30. It is now 50% of the float. It's saying that there are 27 million shares out of like a 70% float. That's like 40% of the float. The DTC has enforced an increase of capital requirements by 250%. Come on. Yeah, I certainly wouldn't be messing with it right now. That's where I was like, did you hear what I was saying like earlier, where I was like, well, my total exposure on this is $10. Is it worth risking $10 on the chance that it's not over? Well, at this point, if it's if my risk reward is 1 to 100, then that means that like the percentage of it actually going up there is like 5%. Just based off of that, I would have to say that it's 5%. I feel like that it's higher than that, but I also understand that how I feel is not a reliable way of doing this. If I was not already in this, I would be looking at this short interest data and saying, I don't know what's going on, so I just shouldn't touch it. Right? For the newbies, how did you reduce your risk to $10? So I bought it at 80 and I sold it at 320. And then I let it come back down and I bought it again at 250. So I made $140 off of that one scalp, and then I bought it at 250. That means that if it goes to zero, my overall win loss on the trade is minus $10. Right? So if you buy into something, it doubles, you exit, then it goes to half, and you buy again. It's house money. Right? How much are the hedgies paying me? Nothing, but they are welcome to come in here and give me donations just like everybody else are. I was going to sell at 400, but Robinhood didn't let me. Really? Maybe we're looking like we are getting some green candles now. Well, I understand that they wouldn't let you buy again, but they should have let you sell it. I do think that they're going to write it all the way down. I really do. So let's look. What are they saying? What is it saying? Yeah, that was about Donald Trump. I didn't cover that. Risk is the day low. Stop is like, well, I don't know about that, dude. But my 102-year-old grandmother bought GME in August of 1995 and held all this time. Spez changed his profile to diamond hands. I don't know, man. Last porn. Day 2 in my position down 90. They're getting margin called, man. Like, I think that these are margin calls. This move. So, another point that we should consider. Don't get me wrong. I think the only thing that matters is whether or not shorts are still in, and I'm unsure about what that is. There's data that suggests that they're out. Let's say that there's data that suggests that they're out. I'm a little skeptical. I don't know how that data works. I can't verify it for myself. When you look at the Volkswagen crash, it was like this, and it came all the way back down, and then it went whoop. So just the price movement down in and of itself doesn't invalidate the trade, right? I want to say top this hour. Hardcore laddering. Okay. So people are selling it and buyers are pulling their bids. I really don't see what is unusual about that, guys. Go retweet that AMC reopening announcement and get that trending AMC to the moon. What's this? Massive ladder attack. This is their last attempt. I don't know if that's true. How do you know? This is what I hate. This, right? Like, okay. How do you know that? You don't know that. That's the problem. He's saying this shit. This is their last attempt. How do you know that? Are you a mind reader? Do you have an insider? Like, have you spoken to a guy at a hedge fund and you know that, like, this is their last attempt? You don't know that. You just think that. You don't know. He's posting this. 332 comments in an hour. Oh my gosh. Hold you retards. Yeah, this is the Volkswagen squeeze. Yeah, so I'll show you here again. Look. I get it. Maybe we are here. Maybe. I'm going to say that the probability right now is low. Like, if the stock price is going down, I'm not going to say that the stock price going down in and of itself makes the trade invalid, but it strongly suggests that we're wrong, right? It strongly suggests that we're wrong, that the shorts are already out. It's a different scale. Well, yeah, that's true too. The Volkswagen situation is different too, because it was like one guy that, well, it was Porsche that owned all of these shares and refused to do anything, and so they had no choice. A little bit different when that's like a market, and then they come in and they stop, halt trading of it and crap. Like, come on. I would lose my mind if it boomed like Volkswagen. I would too, man. Yeah, what the hell is happening on Wall Street Bets? It is just people spouting opinions on the matter with conclusions to just hold. I don't get it either. Here we go. This person, this is a massive ladder attack. Do not sell. They're not allowing us to buy so that they can continue pressuring the price. This is their last attempt. Okay. Who are you? Licensed overthinker. Karma, 8,000. That's not that much. His cake day was March 3rd, 2020. So he's been around for maybe a year. Almost all of his activity recently has been on Wall Street Bets. He is reposting things. So I don't see any evidence that he's a bot. It just looks like some shithead that doesn't really know what he's talking about, posting his theory as if it's the truth. What would happen hypothetically if a company that was heavily shorted was taken private? Then you would all be given money for your shares based on the price that they agreed on. But, if they came in and they bought the company out for $20 a share and it's trading at like 91, that of course the company would say, no, it needs to be higher. And so it's always a percentage higher than that, which is probably why you didn't see that. Your risk is a day. And you keep saying that, Vlad, but I would never trade it that way. So if you come in and you look at this, I will show you an example. Okay. Okay, guys. Right here. Here's the S&P 500. All right, look. Okay, we're up 3807. It's coming back. I took my profits up here. Guys, it's going to turn back down. All we got to do is set our risk to the daily high. We're only risking 2 points. And then, it could come all the way back down. Good risk reward, right? Okay, so let's take a short. All right, do you guys agree? Let's take it short. Okay, well, let's take it short. Oops. Okay, that was just like, don't worry. Okay, that was like a head fake. Like, they were just trying to squeeze all of the shorts and they got it. So now, let's take it short. Now, we can take it short now, right? It's safe now. And look, all we have to do is set our risk at the high of the day. Okay, so we'll go short here again, right? At 38.11 or whatever. Okay, agreed? Good, yeah. Oops. Okay, wait, this is it right here. This is it, right? We can take this one short. Look at that. That came back all the way to this one, and we broke the ATR stop. The ATR stop says that we're short now, right? So now we can take it short, right? I know that 38.20 isn't the best price because it dropped from like 38.24, but we can go short, and all we have to do is put our stop at the high of the day, right? Yeah? You agree? Okay, let's take it short. Oops. Okay, it's doing okay. It's just kind of, we just gotta, that's okay, guys. It's just going sideways. We just gotta wait it out. No, it's going higher. They're going to break the high of the day. I almost guarantee you. I probably shouldn't say it that confidently, but when I see we're like 2 ticks away from the high of the day and there's a bunch of volume trading up there and everything, like there's like almost no way that they're not going to push it up there and break it. Just all that needs to happen is one stock has a piece of good news out there and it could push them up, So, how do you do that? How do you come in and say, like, this is a good counter trend trade, we can take the risk here and yada, yada, yada? Like, how do you do that? Is it the high of the day? No, it's not. So when I've been going through and I've been doing all of my back testing, if I try and set my risk based off of some price level of a previous candle, there's like absolutely no edge in that. In fact, just the fact that it pivots, just remember when you look at this chart, do you see those little like squares and circles at the top, on the other sides every time that it turns, right? That's the pivot. This is when the pivot was confirmed. Pivot confirmed. That's what that means, right? When a pivot is confirmed like that, it means that there's likely to be another pivot soon. Means there's likely to be another pivot soon. Do you see that? So why would you try and hold risk off of any of that? Because the probability is that it's going to go beyond all of those. And look, it is. It is, because it's going around, right? What you really want is like this thing back here, right? You bought down here. Okay. It went really far before there was a pivot. Trend. Now let's come back here. Let's make that small. Okay, what is this telling us? Okay, so there's the open. There's our big move that we were looking at. And what does it show? Okay, we completely blew through all of the short positions that were there from the overnight action. And, okay, it says that I'm hearing that Robinhood has further eased restrictions on some stocks. Don't see which ones yet. Anyways. And then this right here, it's been writing this the whole way as well, right? So that means that like anybody that's been going short today has just been run over. So when it does this and it's staying above this dotted line, no shorting. No, that's my policy. No shorting if it's above that dotted line. I mean, if we're in here and then it comes to that dotted line, then maybe you can short. But if it's been writing that dotted line all the way for multiple bars, no shorting. That means that you're on a trend day. We are in a trend day. Oh, look, by the way, when I said I almost guarantee you we'll hit a new high, it did while we were talking. Yep. Okay, but what about the volume? Okay, so here is the big volume. Now look at these bars. So here's this bar. There was an okay volume on that one. What about this bar? Look at this bar. Nothing. Make that more clear. This bar. Nothing. This bar. Well, this one was okay. Okay. What does that mean? Offers are pulling. No, I don't have it for you over here. What does that bar mean? Price moved a lot. Cumulative delta didn't. Probably it means that price is pulling. That, or there's extreme disagreement on the bar. But then if that's the case, then somebody lost big time because whoop. You know what I mean? So what was the point of all of that? Trying to say, oh, I have a good risk reward here because I can short and the high of the day is my risk. Okay. Yes. You do have a small risk reward, but you know what? Your probability is very, very small. Very, very small. So you don't really want to take that trade. The only way that you can really take a counter trend trade in that against that sort of a thing is to come in and say, I have a signal. I have this thing. For instance, I'll give you one. If we touch 3 standard deviations away from the VWAP based on like an ATR and the VWAP being the center line, okay? 3 standard deviations, then you have an increased chance of a reversal. Yes. Okay, Robinhood lifts its restriction to 100 shares. Why, Seth? What do you mean, why, Seth? I'm just going to assume I know what your question actually was and answer what I think your question was or my assumption is. So if you have a really good risk reward, that is that your reward is like 10 times what your risk is, then the probability of that happening, you should always assume that it's a martingale. So, you know, if you don't even know, like this is some situation you've never backtested before and all of that, then you should just assume that if I took this trade 100 times that I would come out break even, which means that I would lose like 10-20% of the time, or sorry, I would lose 80% of the time, but then the one time that I do win, it makes up for those by it going 10 times, right? Repeat that. 3 standard deviation VWAP on what? What is not clear enough about that? I think it was an average true range. So like these B1, well, how was I doing it? How was I doing it? Yep, standard deviation. Okay, yes. Oh, not an ATR, just a standard deviation. Okay, yeah. So you're looking at the price and you do a standard deviation on the price over a certain period, okay? If you, and NinjaTrader has an indicator that does it too. I don't know how they calculate standard deviation. It might be different, but generally speaking, if you get beyond a third standard deviation from the VWAP, there is a higher probability of a pullback. I believe that the probability is still less than 50%, but it is more than. So I haven't backtested that one in a long time though, so probably better double check that one. Oh, actually, you know what? That makes a lot of sense. I'm going to say that.
Block buy.
Okay. Oh, what were you saying to error 404? All that matters is what's happening now. You can't do historical data. Well, you can. I would do it for you guys like literally right now, but we only got 10 minutes left. Are you along some ZN? Hey, that's a good, I think that's an okay trade. I'm not so sure why the treasury's moving here though. I kind of think, well, it's a little interesting, isn't it? Because they moved down pretty hard overnight and then they've just been like dead all day. Like, it's an unusually constrained day in the 10-year. You say risk reward was great in 80s? I don't know. Here's what I think. I think that if Robinhood didn't just ease their restrictions, that it would have kept going down. Also, Treasury refunding announcement tomorrow, likely the focus. Hey, that's a good. So I have a question for you, Joe. How did you know that that was tomorrow? Because I come in here, I mean, obviously this thing doesn't only shows me today. I come in here, and I go, okay. I don't look one day in advance anyways, so there's not a whole lot today. Okay. US, like it's not listed here. Treasury refunding announcement. Maybe we can go to, what is it called? treasurydirect.gov. Yes. New squawk as well. Okay. That explains it. Yes, I agree with you. It's worth the $250. It is. I can't afford that, but admin says go ahead and show me. If you come back tomorrow and you catch me early enough and like we don't have other stuff going on, we'll program it and retest it. Because I've done a historical backtest on it and it came out okay. But I think your point saying that what the historical evidence of it is doesn't matter. I wouldn't say that it doesn't matter, but you're right that the future could be different. The future could be different. Did it get halted again? Yes, sir. They got halted on that buy. Oh, snap. Worth it when you're profitable? Well, so here's my question is what is it that you're doing otherwise? I mean, I'm normally pretty skeptical when somebody that I don't really recognize their name comes in and says that they're profitable, but you're saying you're taking a trade on the 10-year, you say you're profitable. What would you say? And I don't want you to like lay out your trade because obviously if you have an edge, you should share it with me, but you shouldn't share it with everybody else. Right? But if you do have an edge, like what generally would it be? Like, do you use well, let's say price action, like you're just looking at the chart? Are there some indicators? Are you using order flow? Are you using level 2? How much of what you do is based off of what you see in technicals, and how much do you think is based off of your fundamental views of the overall economy and like breaking news? What do you think about Bitcoin in the next year? I think it's going down. Boom, boom, boom. By the way, what is our MSTR today? It's up again. And is the Bitcoins up today? Where is the Bitcoins? There's the Bitcoins. The Bitcoins are up a little bit. Okay, cool. But to Joe's larger point, is New Squawk a good squawk? It is. I think that Financial Juice is good, but it's not as good as the New Squawk one, just to be honest. But the price difference is like ridiculous, right? Like $70 a month or $600 for a lifetime versus $250 a month for Rand Squawk is like ridiculous, right? Show me. So the problem is I didn't explain to you the problem with that, did I? If you come back tomorrow, we'll program it and we'll back test it, okay? Because maybe it's changed, and I only vaguely remember what we were doing with it. But the problem with it is that I have to use tick replay to test it. And so for me to run it even over like the last year's worth of data, we're going to have to take like 20 minutes to test it. Okay. Or even more if we want to test it on the ETH chart. Could be like an hour on the ETH chart. So, or maybe I'll do it while you guys, today while you're gone. And then you can come back tomorrow and I'll show you what it said. In hindsight, you could have bought 3 shares with Jimmy. Yeah. But here again, so if you had seen when we said that they're easing restrictions, if we had gone in and bought there at that point, that would have been a good trade. Well, you want to know about the 3 standard deviations from the VWAP, don't you? That's what you want to see. What you're saying, show me. Oh, then what do you want to see? Oh, I was wrong. Oh, or you want somebody else to show you something? I don't know. Okay, we're cool. I guess not. Whatever. Whatever. Look at that. Oh my gosh. Okay, so if let's say, well, you know what? I don't know. So when I look at this sort of a thing and I say, okay, there is a certain point at which they get over a certain price and like it's really good, right? Where is that? Well, I can see here. Oh, I need to make that way smaller. So I have these models that can kind of show me this sort of thing and give me a better estimate, but I can kind of just guesstimate it based off of where price was, right? So where did it spend the most time? So there's going to be this spot, and I think that there's this spot just because that was where the stoppage was, and then this high right here. So those are going to be places that people are going to like look at. So even though I don't believe that these sorts of things have real predictable probabilities, because everything that I've looked at says that they don't, but I do know that if they get over that spot, like it's going to change people's psychology. And so if they were to break, maybe this spot right here would be enough to say that it's good. But let's just say that if they get back over 160, that this thing could, and then at that point, we would have to be looking like, at that point, I would be saying, are they going to fill the gap and go back up to 210? Someone said that shorts are over 100% in GME, and I said data flow on stock are not accurate. Okay, you're totally right, admin. I wish I knew more about this. If you guys know more about this, like these Orbix, whatever. Who are they called? Who are these people? Ortex. These Ortex guys or these S3 guys, if you have any inkling about what they use to calculate the number of shares short, I would love to know more about it. Because when I look at it, I don't really know what's going on. Short interest is 2 week lag. It's 1 week lag. So when you get so what happens is at the end of the day, from my understanding, is that they will then go and look at what the short, they'll count the short interest, and then that report will be released a week from now. Probably so that it can't affect the market. So next Tuesday, that is the point at which I can conclusively say that I am confident about the number of shorts outstanding in the market. But not until then. Until then, I don't really know. I don't really know. They don't know where we at in futures. Okay. Anyways, if it was not for my ability to hold complete risk, I probably would have sold it. But I think that I would have sold it a long time ago. In fact, I think, thinking back on this, it's like in retrospect, it's kind of like you can't account for every situation. So if we just go in and be like, okay, like if I had been on the ball and had been reading the news correctly and everything, what should I have done? Well, one thing is that I could have just sold right here, knowing that the Robinhood buyers being taken out of the market was a killer for it, right? So I think that was right. Oh, actually, I did get out off of this, right? I bought it back in here. Okay. So then there was all this pre-market stuff. I think that here at this point that I should have taken 300 if I was like concerned about the risk. But in this case, I think it was like, hey, I can just hold it. Now, I also could have puked yesterday when I got to break even. That was another spot. But I'm okay with it. It's fine. Almost 100. Yeah, it's already doubled from the bottom. Almost. They're not over the high. If they get over the high, then that's going to be a thing. So let's think about this for a second. So I think that them increasing the amount of risk that you can take on in this to 100 shares should make it tradable for the vast majority of retail traders. But will they be able to like just really shove the market makers around like they were doing like last week? I don't know about that. You think that SLV is going to get smashed? Well, they certainly filled that gap that we created from over the weekend, but I don't know. I mean, I thought that silver and gold were looking like an okay buy where they were. So when I saw that, so that's why I got in on that one. So if silver like crashes from here, I'm the tart, because I definitely took that one. And nobody shoves the market. That's absolutely what happens, dude. The whole game here is they want to be able to see where the retail traders are coming in so that they can pull their offers, because they don't want to get run over. I'd say it's likely retail traders can do that. While there are a few people posting purchases of GME in the 100K mark, they are a minor percent of traders. Yeah. Adam's saying in the futures we can see the real shorts real time at a centralized exchange, right? Yeah. It's a totally different game than in futures, right? But in futures, there's always an equal number of long contracts and short contracts, so that's also kind of different. I'm like, dude, Gary Rich is here. Yeah, Gary's always, he's here all the way. I'm actually surprised because I thought you were kind of that you liked the gold trade. Well, it was Sunday Driver was the one that really truly liked gold, right? This is the thing that I think is so interesting is that was the way that Reddit turned on that silver trade, because I think that if Reddit had said yes, it's okay, we can pump silver too. I think that if they had been on that one would still be going too. But I also believe that the overall trade had some things going for it beyond just everybody pumping it. And to me, it's kind of like, okay, like everybody pumped it, they'll get out. It's still like, I'm still in a fine spot. And that the longer term buying off of dollar depreciation should come. Probably in a lesser scale though, but with more people on the I and GME, the quantity of people buying one or two GME is likely higher. Yes, probably. Well, and here's another thing is that like when you look at the amount of volume and stuff, like there was short covering, yeah, for sure, but probably also the market makers were just pulling bids because they were saying like there's no buyers. Why if there's no buyers out there, why would I put a limit order out there? Like seriously, if I was the market maker in GME, no way in hell that I would be holding my bids. No way. And the more that it goes down, the more that there's like that yeah. Dude, is this freaking I didn't even remember his fucking name anymore. Oh, thank you very much, Flying Man from France. Oh, well, that's a lot of different instruments over there, man. You know what? I feel like that the Europeans' game is a little bit more sophisticated than ours, to be honest with you. But I can't really watch the Euro instruments, so I can't really. But everything that we talk about order flow still applies, and it's good that you come in here, because I think that if you come in and you try and understand market making and order flow, you will know a lot more about how markets function than the average retail investor. I wish I could say that guarantees that you'll make money, but it doesn't. But you'll at least stand a better chance, I think. Most of the guys on my channel, like you notice that the number of streams that I get per day and the people that come into chat, it's the same people. Like, we do attract successful traders for some reason. Maybe because, well, I think it's just because I'm honest, because I don't think that it's because they sit down and they're like, oh, Seth is amazing and I want to be with him and that'll make me an even better trader. I don't know. I think most of them think that they're so smart and that they're going to pull me up. I'm getting some Twitter notifications here. I've never seen a recovery. Yeah, this is pretty crazy. But there was this huge overnight thing to go through too. So let's see what happens. Let's see what happens. To be honest, there are a lot of people streaming trying to just get on the hype train since last week. I lurk because I like to have data-driven decision making. Yeah, you know what, Pineapple, though? It's so hard because I wish that I could say that all you got to do is have a data-driven decision-making process in you. But when I go and I do like all of my backtesting and everything, like the edge that I can find from doing that is really small too. So it's like you have to go into a lot of situations where you don't really know exactly what's going on. Like, that's why we have a market, is because not everybody has all of the pieces of the puzzle. You know what I mean? For my calmness and reasoning, well, I thank you. That's not intentional. I can't help it. And I don't really think that my voice is, it's fun. That's the one that people tell me all the time, actually, Blas. You're not the first person to tell me that. And I'm like, I don't think there's anything special or calming about my voice. Oh, man. Have they released that? It doesn't look like they've released GME yet. So let's see how much it bounces. It could be a dead cat bounce for sure. I mean, like for me to say that this recovery is like super significant change. Well, I think that Robinhood opening up buying is a super significant change. I think there's something else about that, though, that's more important. But I'll get to that in a second. For me to say that it's a super significant change, I think that we would need to get to yesterday's close. If we get to yesterday's close, then that would be like price rejection to me. But, you know what? I don't like you. Okay. But I think that the more significant thing is that we had these huge moves down, and it really got crazy down there at the bottom, right? And then Robinhood eased restrictions. So why did they do it then? I think that there was a large trader just got stopped out. That's what I think. I think that a large trader got stopped out and had his margin call, and Robinhood finished executing the margin call, said, okay, now we can reduce, now our risk is not as high because that idiot is out, and now people can buy again. That's what it looks like happened to me. I'm making an inference, so let's be clear. I'm not like, there's no proof that that's what happens, but I think that the timing of it is quite coincidental. So let's watch. I bet you that somebody's going to post on Wall Street Bets today a pretty massive GME loss where they were selling some contracts at 75. Just like we did when it was like at 120, right? It's a way to mitigate. I don't think it's that. I think that they just really didn't have the collateral for people to be trading it like that. See, what I think the mistake that Robinhood made is that they should have restricted margin trading on this like 2 weeks ago. Like, they need to assume like the Varshock thing can happen and not allow retail traders to take such a huge margin position. Like, if and so that the people trading, let me put it this way. The people trading the options and trading stocks on margin should never affect the people just trading individual shares, their ability, right? So I think that Robinhood made a mistake there by not putting the brakes on earlier to the point where they had to restrict trading for everybody instead of just margin. Anyways. Yeah, Robinhood has to post cash for every share bought. They don't make a market in any shares. Sure, but when somebody puts on a call and they buy like $50,000 worth in calls, that's even more cash that they have to put up. Right? So if they had restricted all of the people buying on margin and stuff first, then it might not have gotten to the point. Well, I guess Robinhood probably would still have had to have raised cash, wouldn't they? But you know, at the very least, it wouldn't have been as long or as bad. I still say I blame them. Well, they are for payment for order flow. But I don't get why that matters. You're doing the same thing that, well, I just did it too, didn't I? I said, well, here's a very coincidental thing. I don't think that we should trade off of that. I do think that you could trade off of Robinhood using the restriction and buying. That was a good trade. I didn't hear, when I heard the news on the news squawk, I didn't immediately buy because I'm like, well, if they raise it to like 5 shares, then like, who cares? And then once I finally saw that it was 100 shares, it had already moved quite a bit. And I'm still not willing to put more risk onto this trade. I'm pretty comfortable with being able to just hold it with only risking $10. I'm really happy about that, and I think that I should take advantage of that, not disadvantage myself by taking on more shares. But I digress. It was a good trade if you had bought it based off of the news. Is GME still stopped? It looks like GME is still stopped. So it is interesting to see what will happen from here. Because maybe the market balances out here now. Well, guys, I got to get going. So should we change the video to just be retail feels the squeeze? If you guys have a better, always, guys, so you come back to the channel in like an hour and you will see this video will be up as a regular video. And then you should be able to go into the regular video and comment on it. And I like to know, like, what did you do for that day? If you did well or not, because I do keep track of it. Like Vlad, he posts about it every day. And I don't always respond to everything that Vlad says because sometimes I just don't even know what to say. But I always read it and I love to see what he's doing. So you come back and comment. And if you have a recommendation on a better title that would have better keywords and stuff in it, then let me know. But today we'll just say retail feels the squeeze. How dare you leave us? I know, I'm sorry, Scott. I miss you so much. But I have to go to a meeting. So stay profitable, friends.